Good, good morning, everybody. How are we all doing today? Grandson says no, Grandpa. It can't. What are you on about? Oh, all right. It's gonna be a fun week. Are we doing ups? I don't know. All of Twitter thinks the market's gonna crash on Monday. I heard a rumor that a former upstart bull is back. McLovin? I haven't seen him, but he might be. He's picked a terrible time to be bullish on upstart, but morning, Uncle Greg. Thanks for the AMCDD. I Venmoed you the Dogecoin as you requested. Perfect. How about the quality of collateral these days? RP up for some fun. Yeah, that's a problem. I saw in Superstock that they're expecting MOAS this week. Well, they might get a test of Gamma Max if they're lucky. For the record, I made that McLovin rumor up. There's absolutely no basis for it. Good to know, Daniel Mack. I've just finished replacing the front end on my commuter car. I don't think I'll ever do that again. Or would you took it apart? 1 second. The Fed's SRF a hedge against RRP going to zero. No. Um, the SRF and RRP kind of create a range for overnight interest rates where like the SRF is the ceiling and the on RRP is the floor. Do you expect even a bit of recovery after last week? Not necessarily. We may just get a continuation. I mean, I don't think any of the like conditions are improving. Bond volatility is continuing to rise. Correlations continuing to move up. The dispersion trading with equities and indexes is breaking down. Short vol is getting squeezed out. Hard to stabilize with that much sell pressure. Quite hard. I don't see the dollar weakening. I don't see the yield curve inverting further. So, if there's a case for a recovery, I'm not sure what it would be just yet. Do you, JFresh Zurich, pass a trophy back and forth every week to whoever won last week's guess? No, no. We create a brand new one every week. This market can only crash if the individual solo maintaining it with calls wants it to. Yeah, that individual has not been doing so great at maintaining the current price with calls. How many mojitos did you choke down? I managed to get through one of them, and then I refused the second. If we do see a steep correction, what's a reasonable target? 3,800? 3,400? 3,800 is not unreasonable. Below 3,800 and things get very ugly very, very fast. Then there's no telling how far it could go. Calls on AutoZone. I need a brake caliper mount, and they had none in stock, but had the entire kit. Forcing me to spend 80% more. Bullish on price markup and pours being desperate. I already own AutoZone stock. Does that mean zero GTEs with tight risk level by level good this week? Or shorter dated debit spreads for like Friday expiry? Yeah, so zero DTs are getting very overpriced very quickly. It's a problem. Trading them is tricky. You kind of need to wait until either later in the day to trade them, or you need to get out of them very early in the day, or you need to use spreads. But they're overpriced. I had zero DTEs on Friday that closed $10 in the money, and that was about what I bought them for. So that was about break even. So they're quite expensive. Do y'all have trophy rooms? Nope. We also we also send out a participation trophy. So win or lose, you get an extra trophy every week. Scary that it's so bearish that even the news and Twitter is bearish. It feels a little one-sided, makes me nervous. Boomers get scared of death crosses, which I believe we have as of Friday. Is Gamma Max on GME $24 now? I don't know. I don't look on Friday. No, it's $19.92. I tried zero DT this past Friday with like 15% risk, like $3 to $5 out of the money. I got stopped out every time. But yeah, they were like $10 a contract. They're not cheap. I mean, you either need to hit like out of the money, right? So, um, in a similar way that I'm moving from like straddles to strangles, instead of buying the at the money contract with the volatility as high as it is now, right? So, you're trading, so we're trading at like 40, 42, 40, right? Instead of buying like the 35, you'd buy like the 40, like the 42, 30 or 25. Same on the upside because your range is going to be much bigger, right? Volatility is significantly higher. So that's what you have to do, but obviously that means more risk, and you're still overpaying on that risk. So that's just going to be a factor of things from now on. Flat days will be a lot harder to trade because of that. You can always sell and create spreads, and cap the profits in the range you're projecting, and that'll lower the capital cost up front. Otherwise, yeah, you could like blow out allocation on a small account really quickly with the current prices. I tried zero GT this past Friday. I've been trading 2 to 3 DTEs just for scalps because theta decays a bit slower. Would zero DTEs be a better option now with them holding value a bit longer? I mean, they're holding value a bit longer because of implied volatility. If VIX crushes in the midday, though, you can get blown out super hard. So not necessarily. Debit spreads on zero DTs might be better. During your daily streams, you often identify calls, puts being bought, sold. How do you identify whether they're being bought or sold? There's a few ways of doing it. The general one is the bid ask on the contract. That's like the most common attempt at defining bought versus sold contracts. But there are more complex ways of attempting to define bought and sold. You could do some research and figure that out. Are we just in limbo period where zero DTAs aren't optimal? Or does this only get worse as VIX climbs higher? I mean, it gets worse. They'll get more expensive. As we push into like a higher volatility regime, which we already are, right? Like it's well underway. Yeah, zero DTs are just gonna get a lot riskier and a lot more expensive. But intraday moves are also gonna increase, right? Like VIX is at 21 right now, which is like we should be seeing like an average move each day of like 135 BPS. So, I mean, one way to do that is, if you think you're going to get like a trend day, for instance, is you can do like at the money debit spreads and out of the money zero DTEs, right? Or do a debit spread and then add zero DTEs as, you confirm to increase your profitability in the greater range. Yeah, and not to leave you hanging high tide, we have a few ways of attempting to discern whether, calls and puts are bought and sold, but they're not they're not really public. Um so yeah, if you want to know more about how to do that, there's a lot of research papers that you can find that will help you. Um there's things like volatility, time and sales, and stuff like that that you can look into. Is there any good income strats right now? Better to just hold treasuries and wait till a market correction or crash. I mean, yeah, there's you can you can sell the other side. Obviously things like butterflies and condors become extremely risky during periods like this. But there's also stocks that are less exposed to that volatility, and some ETFs and things like that that aren't really going to be as greatly affected. If you have a little bit of theta and you can sell a wide enough spread, you can usually hedge like a very wide condor. Um, there's always credit spreads intraday. Those can be used for income. They generally require a little bit more management, but if you can lower your risk on them, they're not so bad. And then of course there's always covered calls. Uh, you can do like buy rights on stocks that aren't trading at extreme P's. And you could do like in the money buy rights if you think things are going to go down, and if they don't, you don't really take on any risk, right? Because you'll get premium. So I mean, one strategy that you can do in periods like this is that, right? Say a stock's trading at like $24. Say like book values like 18, right? You could buy and then write the $18 contract. Say this is something you want to buy in a crash, for instance. So you write like an $18 like 30 or 45 DTE um covered call and in the money, right? And then if the price of the stock goes down, you're not going to get assigned. If the price of the stock goes up, you don't really lose anything. Opportunity cost, but that's it. Which is much better than a CSP, right? We're on like a CSP. If you sell the 18 on that same stock and the price drops to 14, you're going to lose that $4 difference. I mean, minus your premium, and then it could end up staying there for quite some time. Whereas on the covered call, say it drops from like 24 down to like 20, right, and starts turning back around, and the market's starting to look a little healthier. You can just close this and capture the difference in delta on the covered call. But holding treasuries is nice. Yeah. They're starting to, like, the long end of the curve is starting to get pretty attractive. I would still CC on long-term PP commodities, but it seems risky since we're expecting them to go up. Yes, but they won't go up in the event of a crash. So keep that in mind, especially like the equity-based ones, right? Like they're probably not going to have negative beta if the market crashes. Things like BTU will probably go down. Even if they may recover a lot faster than stuff like tech or software as a service or retail or health technology, right? But um, they'll still go down if the market crashes. Crash doesn't happen, then what? How many of you are going to be sad pandas? I mean, I don't care. All of my November puts are already in the money. If the market crashes Monday, I just make more money, right? Are you going to be a sad panda if it does? Because that kind of comment generally comes from somebody who's overlong a bunch of shit and has been losing money for 3 months. Where do you think TLT will bottom out, or is it difficult to say right now? It's kind of hard to say. I mean, I kind of would have expected it to have bottomed out back at like, well, Jesus Christ, back at like 85 or 90. It could go, it could go to 80. And under like an extreme scenario, it could go even lower. I don't think it's unreasonable to see the 20-year hit 6 or 7%. It may not stay at those prices for very long. It might bounce very, very quickly, but yeah, this may still have some more downside. For straddle strangle exits, does that mean to cut the dead leg if more than 135 BPS move intraday? Wow, overnight. Or cut at the bull bear confirm lines from the daily DD. You could try that. I don't know how effective that is. I've never tested that. Um, but yeah, I mean, if you move more than 135 BPS overnight, I mean the purpose of them is to capture overnight moves, which especially as volatility picks up will tend to be greater than intraday moves, but or at least historically that's true. Uh, but yeah, if you move outside of the range that we're currently trading in, which sometimes is far greater than 135 BPS, you would probably cut any dead legs that you still had. I don't really use vol to define, and that's what you're doing there is you're trying to use volatility to define the trading range. And I generally use like where the market maker is making an active market as our trading range, and then as we start to move into a new range and the market maker starts making the market lower or higher, that's when I'd consider the prior range dead, right? But that might be something to try. I've never tested it. We talked about it all week, but can you go over how GME looks going into the T+2 window this week? Interesting. I mean, I don't know how much covering they'd have to do into a down market. We haven't seen like the tips crossover, although that can happen really quickly. We are seeing them start to contract, and there was some covering on Friday. Whether it's going to run or not, No idea. I have like a small position on it in case it does. There's a chance that, bulls fight back one more time against the breakdown of the 200, but they haven't been very successful in doing so. And without at least a flat market, I don't know if GME has enough options interest on it to inverse the market like that. The negative beta of yesteryear doesn't really exist as much anymore. It's illiquid enough that we could have that, but I don't think there's enough options interest for it to really run hard into a falling indexes. So you need the market to bounce. And there's some slim chance that the bulls get a little bit of an edge for a day or two. Friday's charm came in negative, but it doesn't look good for them, right? Like even if they're able to pump for 2 days straight, they're really not going to push us much out of our current range. Do you have plans to add on your November puts or sticking with shorter dated? I mean, I have Jan puts too. But those are just for, I mean, they're way out of the money. They're like 3,600, 3,400, 3,200, 3,000. So those are really just for Vega. Um, I highly doubt they'd go in the money unless the market crashed, right? So yeah, mostly those are just like a rotating position to scalp increases in VIX. Just because VIX options are mispriced, and so it's a better way to get exposure. Those are up. I mean, I bought a lot of them at like 13, 15 VIX, so I've been adding to that position for a while. So, would you mind giving some insight on price action on my portfolio M, GME, HE? I mean, either you get a Russell 1K blowout, right, and everyone covers their shorts, or you don't, and if you don't, you're fucked. So it sounds like all of those are Russell 1K stocks. Two of them are XRT. Utilities have been picking up some interest. If the market starts to decline, they might pick up a lot more. So HE might get some pressure on it. But people are still scared of the lawsuits. I think a lot of people are afraid that even if they're like Hawaiian Electric is found to be not culpable, they'll still lose because of the like rebuilding the infrastructure costs. 25 to 30% yields are my bottom. That's not gonna happen. You taught me to hedge both ways. Don't be silly. However, I've witnessed a bunch of others in chat who haven't grasped that perspective yet. I'm a happy panda regardless which way. Nice. I mean, people should have hedges. They're cheap. Upside hedges are super cheap right now. So I don't see any reason not to protect your winning positions if you're long puts. 15 to 30%. Oh, that's still extreme. If that ever happened, you wouldn't even get a bid on. Are XSP or SPY useful for 3 DTE straddles or less movement, less profitable? Uh, QQQ is okay. I don't really like XSP or SPY. Maybe maybe short strangles. I guess volatility is a little bit better on them, but QQQ volatility is even better than that, right? That wasn't covering. That was Pulte. No, it fucking wasn't. I'm caught up. Let's do it live. What's up, Cobra? Where and what do you look at to see where the MM is making the market when a new range is entered? You can look at. You could just look at OI, right? Each day, as we push directionally more one way or the other, and see if interest is continuing to pick up. I mean, a lot of times we can test the upper part of our range, like we did that on SPX just recently, right? We were trading up here, which is kind of the upper range for interest over a few days, right? And we never really saw interest extend out past gamma neutral, right? Like there was a little bit of interest at like 40.50, that's or sorry, 44.50, that kind of just sat there. But it started to become more and more sold, um, like over this 3 day period. But we didn't see a lot of interest picking up in that range, right? So the market maker wasn't forced to push push their hedges up because no one was buying a lot of out of the money calls. And so yeah, you can, I mean, you can just look at OI each day and kind of, if you kind of want to know where like longer dated interest is starting to come in or fall off, that's a pretty easy way of approaching that. Don't get me wrong, longer dated interest can come in all at once very quickly, and in that case, yeah, you'd be fucked. But hopefully you're paying attention to your positions intraday and you don't get rugged. How do you think Sunday's ES Open will affect action early this week, or is it negligible? I mean, all overnight moves are negligible that are under 100 BPS. The statistical correlation between that and the like open close price of SPX the following day is really low unless the move is over 100 BPS. I'm sure you've noticed that like over the last several months we've had some really big like overnight swings, right? But not 100 BPS, but like most days we'll get like 20, 30, sometimes 50 or 60, right? And then we'll still close the day flat on the prior close. The first time GME squeezed, the options chain stacked, yes. No, the options chain was actually fucking like the out of the money call interest was insane. The setup was very similar to like what happened with Bobby or what happened with Upstart, right? Huge amounts of like at and near the money puts and then like 5 times the amount, 10 times the amount of out of the money calls. So as soon as those, put positions started to break down and the market maker started to hedge the out of the money calls moving up in Delta, it took off. When you pick up a hedge, do you leg into achieving Delta neutral or a percentage of your Delta of the winning position? Sometimes. It depends on what I'm hedging. Like hedging intraday shit, no, I'll usually just pick up the hedge as the market starts to move against me, and then I'll sell something against it if I think it's reversing, right? And that way I can, lock in whatever range that I was able to hedge, and then but I'm not exposed to like a continuation of the move. If I think the move's going to continue, I leave it open. If I'm hedging things like 30 DTE or 45 DTE condors, I'll probably just hedge on the intraday if my like risk level is breached. I very rarely like delta neutral hedge. I'm not like making a book, right? So I'm not like trying to capitalize on arbitrage either. So I don't really care about like dynamic hedging delta. Mostly if you try to do that, you'll just burn up a lot of money. If no GME MOAS in October, then November, there's no MOASs adapted by the Dans. You should know that by now. They might, or all the puts get blown up. This could just as easily be sold calls or sold puts, right? Even if they lose, there's some issue with who pays the bill. Fair. Why did the London Stock Exchange have idiosyncratic outages last week? Who knows? That place is corrupt as fuck, though. Could that happen to Upstart again with it rocketing because of the puts and calls you just mentioned? I mean, if it gets shorted really heavily again. Right now there's a lot of vol shorting on Upstart, but there's not a lot of there's not a lot of like interest in the lending pool, right? Last time Upstart's borrow rate was quite high. There was a lot of like entrenched short positions. That's not so true now. There's some, but not as many. If the Fed's really going to maintain higher for longer and Upstart's earnings start to suffer because of that, then the actual shorts will start to come in on it. And then you'll have both. You'll have vol shorts and long shorts. And then yeah, we could end up in that position on it again. But Upstart would still have to survive that period of time, right? And that's the speculative part. We don't know how long that'll be. We might stay at this interest rate for 6 months or a year. Thanks for providing honest insight for the 200 watching, but not liking the stream. I'm over here rewinding and taking notes. Thank you for educating and sharing your time. Thanks, Uncle. How exciting does Siri look for OPEX after Friday's close? What did it do on Friday? I wasn't fucking paying attention to it. Eh. I mean, it's it's super fucking illiquid, right? They've so on Siri, they were covering long shorts here. They didn't actually get a lot covered, right? And then they've used ETFs ever since, right? They just slammed the ETFs in order to drive the price down. Um, so now they've got long shorts and synthetic shorts sitting on it. They might try to hold off for earnings before covering. They may try to cover before earnings, right? We'll see how they feel that their risk plays out better. But earnings are the end of the month, October 31st. So and they're not. I don't think they're projected to miss. Yeah, I don't think it'll be hard for them to beat 8 cents. So if they're not going to get any liquidity from earnings, or they don't think they'll get any liquidity from earnings, they may try to cover in advance. We'll see. Series kind of a weird one, and it's got a huge float, right? Like 623 million shares, and tracking like vol short squeezes or OPEX runs, right? On the back of stocks that have like almost mega cap liquidity. That's not really something we have a lot of historic data on. Usually we're looking at shit that's like, you know, Upstart or Fubo. Well, even Fubo is kind of overly liquid and it tends to lead to its price action being a bit more erratic. But like stuff like Tupperware or Express, right, where you have these really small floats that become illiquid very quickly. The thing about Siri is that I'm pretty sure that banks have just shorted the entirety of the float in order to take advantage of the arbitrage of the Liberty Media holdings. And so I think they're kind of stuck in that trade. And the interesting thing here is because they covered a little bit of that trade um, back in like July, right? Then they attracted volatility shorts, and volatility shorts tend to create a lot of volatility in the underlying. And if you get a big surge in volatility, that can pressure the long shorts that are just kind of sitting on the stock, right? Because they're highly incentivized to go short Siri and then long Liberty Media holdings. And I think they're waiting until like a buyout occurs and they get bailed out, which Gaff has spoken on a couple of times, but that's essentially their opportunity to get out of this. If that doesn't go through by the time they need to do some covering, then yeah, it could run a bit. Obviously, it's a very risky situation to play, but it could be profitable. I have some Jan leaps and some November calls, but I would say my total exposure is probably like less than 10 grand. It's not very much. And of that 10 grand, I've probably lost about seven of it if it doesn't hit $7 in the next month and a half. AXP took a hit last Friday. Are calls a good idea? Everything took a hit last Friday. Not if things continue to keep taking hits. We're not in a bull market. We're kind of in between a bull and a bear market in the shittiest possible way. And this week will probably determine if one or the other occurs. My problem always seems to be repositioning and re-entering after profit taking. Any good strategies or tips? I mean, you have to reassess your whole thesis once you take profits, right? So, if we're trading at like SPX 4400, right? Now we're trading at, SPX like 4225. And you've taken profits on this drop. Yeah, you have to look at our new range, right? You have to, probably 4300 to the upside. You need to consider the potential of like 4150 to the downside. Um, so don't what a lot of I think a lot of people get caught up in just trying to play the reversal, like back to the prior range, and I think that's a really big mistake. You have to kind of look at this as like we're in a whole new trading environment, and you have to position accordingly. I would say that when you go to reposition, don't immediately scale up your risk. That's something that I still see people doing, despite us talking about it a lot of times. But a lot of people will get that drop right now. They've got all this extra capital, and they'll immediately go and scale up all of their risk, either betting on a continuation or betting on a bounce, right? And really, you should be way more guarded. You should be taking less risk than you had on the initial position, and then adding to it as you confirm, right? So if that's a problem you're having, that might be a pretty big aspect of it. But I mean, that's FOMO, right? Everyone feels it. Everyone wants to like triple down on the continuation or triple down on the bounce, right? And you have to kind of stop yourself from doing that. I got long-term CCs out on stocks on my cost basis to make sure I capture profit. and happy to move deeper in the money if market accelerates down. Fair way to play it. Yeah, I actually love long-term in the money cover calls on long-term holdings, right? If you sell out like 180 days or so, even if your stock doesn't drop back to your cost basis, you'll capture all the delta, right? So you know, say you got a $60 stock and your cost basis is 35, and it drops to 40. You can close those covered calls, and you'll still be profitable, right? If the market starts to turn around or JPOW lowers rates and things get a little bit more stable. So yeah, I mean, I very much like using in the money cover calls to hedge off, and I think in a higher volatility environment like we're in now, it's preferential to buying in the money puts. So like, you could do both also, and then you double your leverage to the downside, but you want to be really confident that the stock you own is going to go down. But you can like, I think a lot of times they're better than protective puts, and you don't tie up capital, right? Because they're net credit. I mean, OI and volume don't really tell you anything. Rates are increasing, so people are going to be bearish on banks. But like, like volume tells you nothing. And then I mean, it's not going to tell you anything positionally, right? It'll just tell you where there's interest on the chain. That interest could be any one of like 50 different strategies, though. It could be hedging swaps, it could be replicating baskets, it could be, you know, protective puts. There's a million different things. And so just simply OI data doesn't really mean anything. Like, it's, who ate my hat? Welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream, dude.
Happy birthday, Gurk. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold it afloat. If you are what you eat, that makes Gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon win. Praise be to
Glad to be back. I had to cancel before to deal with fraud stuff, financial and family stress. Small $400 port that's now past 2K. Simply applying your rant-like teachings. Much love. Thanks, who ate my hat. Well done. Nice recovery. Don't lose it. As bearish as I am for this week, I think it's worth mentioning we have only had 5 daily red candles in a row one time in the last year. Tomorrow would be red day number 5, assuming we go down. How many times in the last 10 years have we had 3 red monthly candles? I feel like that's far more this I mean, this is just technical bullshit, but it's compelling, right? We're now red on the month. This doesn't happen very often. I don't know. The last I mean the last time that we had three monthly red candles in a row was the OPEX the like Feb OPEX in Jan 2020. And that was the COVID crash, right? The chances of a continuation here are very high statistically. Three consecutive red months on SPX is bearish as fuck. And then if we go to the weekly, right? Yeah, we failed our long-term trend. And this, like, the weekly, so this isn't the, obviously, the weekly 500, 200 MA on SPX basically never crosses, but the spread on it has been going consistently down since September 11th. And it started accelerating more this week, right? Quite a bit. The spread went from like 8.82 to 8.71, which is a huge move on this. If you look back historically, I mean, really the only time it starts to accelerate down is when you get a market crash. So I don't really know if it matters that we haven't had 5 red days in a while. When every other like higher time frame is more bearish and has plenty of room for continuation. I don't think the market. I don't think the market's necessarily going to crash tomorrow. I think that as far as the odds of a market crash go, tomorrow has very high odds. Maybe the highest we've had since March. Um, but that doesn't mean it'll crash. I agree. And there's negative charm that fell off on Friday, and that could add some tailwinds to call positionings, and they may be able to recover a little bit of the drop briefly. I think part of moving into the higher volatility regime is also kind of what drives OPEX runs, right? Um, if you guys look back at the last, well, this entire year, as volatility is crushed out, we've seen a lot of OPEXs lead to downside on positive charm, right? We've seen like Friday, Monday, Tuesday, like kind of fall off, and then we get an uptrend into the back half of the week, right? And before, when we had higher volatility, like a much higher volatility environment, we saw OPEXs were generally met on positive charm, right? And we would see an upside in the beginning of the week and then the downside in the back half of the settlement week. So this may start to shift back, to its old, like its old trend, right? Do you think there's any chance for a bounce on Express anytime soon? I'm not gonna lie to you, I haven't looked at the chart on it in weeks. um I'll take a look. Maybe. I mean, it's kind of starting to turn around. It doesn't have any options, though. That's actually been doing pretty good on the downside in the market. It's up like 20% from its low. I still don't think they're going out of business. And they only have like a 3 million share float. So I like the recovery. I'm just kind of holding my shares. Hypothetically, pretending a trader has a good strategy that regularly returns with managed risk. What's a realistic port side needed to generate the income of a $250,000 a year job? 5K a week? I mean, I think that would depend on this strategy and the returns of that strategy, right? Like good returns. I mean, your profitability is going to be dependent on how much allocation you have per position, how profitable those positions are, and then how much your risk management, how much like extra liquidity you need to manage risk, right? So I mean, 5K a week, probably. I don't know what the returns on the strategy or trying not to describe is, but if you could average like what, like 3% returns daily or weekly? Weekly returns 5K. You could do it. It's kind of hard to do it like above. Well, you'll have some drawdowns if you try to do it on 100 grand, but on like 150 grand, you could probably do it pretty consistently. 5%'s a high target. Um, so 3%'s a lot more achievable over time. So I would say like 150, 180. And that still depends on how much risk you can manage and how good your analysis is, right? Because you can get some extra points in there. If you're really good at reading the market, you can get a lot of extra points in there. I would say that my more risk adverse accounts probably net between 2 to 6% a month. And that varies, but that's very little risk, so high consistency. Um very low risk tolerance. And then the other thing is that strategy scalable to those levels, which is another thing that you'll have to test. I just want to say the Airbnb play was awesome. Thanks. That was pretty good. Yeah, it's a piece of shit company, right? I don't put much weight into volume unless I can discern rather or not it contributes to OI the next day. If it is, likely selling or buying during the day, but I do keep OI in mind. Yeah, you could use some volume to OI ratios. Depending on delta and gamma exposure, which right now BAC's gamma exposure is negative. Yeah, it definitely. I mean, most things gamma exposure is negative right now. Have you seen Macy's? It looks like it go up a good amount from where it is right now. Yeah, I bought 10,000 shares. 5,000 pretty early in the drop, and then I averaged down again a little lower. I think their real estate holdings are sufficient to stabilize their stock price, and I think their dividend will keep coming in. So I'm not too worried about the position. I don't know if it'll run just yet, but it could. It's technically like an OPEC stock. It tends to be a little bit more liquid than the others and a little less short, but it's in that same basket of like highly profitable mid cap vol shorts. I expect GME quarter 3 earnings to be profitable. How do you see this affecting price action as it relates to the strategy of the shorts? I mean, they may cover, right? Like that's what we would be looking for in OPEX to see if the vol shorts close out or if they continue to double down on their ETF shorting, right? Which they can do because XRT is back on reg show. They may have gotten XRT back on reg show in order to hedge off their covering, right? Because they've been shorting pretty hard for quite some time now. So there is a like a brighter side to that coin in that, you know, maybe hypothetically XRT was put back on reg show in order to provide liquidity to stabilize any intent to cover, right? in order to ensure that it doesn't run too much. So it could be the opposite, that's the reason it went off and on and off, like on and off and on reg show. In which case that would be very bullish, right? So we'll see this week. I liked Friday. Friday looked good. Friday looked like Jimmy was illiquid, and they weren't willing to dive into that liquidity too hard in order to stop the covering. So it might add some hope for this week, but we'll see. No problem, Dead Rabbit. I said Jimmy quarter 3 earnings to be profitable. Weekly returns 5K. 3 to 4%, 200K for some flexibility, I guess. Nope, no problem, man. Go my team. Welcome to Dillionaire. Thank you so much, dude. I appreciate it, man. Hit me up on the Discord if you need added to the country club. I'll be around all day later. Let me see what Jfresh and Dork are up to. We can get started on it. Was there any other questions before we get going on the quant rant? Any other stocks anybody wanted me to look at real quick? No. All right. Fubo? Do you guys want to see Fubo? I'll look at Fubo real quick. Fubo got shorted the last 3 days pretty hard, but they're running out of liquidity on it. If it bounces again, I think it'll break out. It'll break out above like 265 again, and maybe even higher. This wasn't really a very significant amount of covering, right? And they didn't free up any liquidity. So Fubo's getting pretty tight, and if we look back here, this is almost identical, right? We got some covering, and then they tanked it, and then we got another spike, and they tanked it again, right? Let me use the horizontal line so you can kind of, or the vertical line so you can kind of see, right? And if we look here, what would it be like that? So I think maybe shorts expect Fubo earnings to come in good, and they might try to clear. This is a little different, right? This one was flat. This one they shorted a little harder into. But it still looks like we're very close to them needing to cover a bit. And if they do, I mean, that last run had quite a lot of volume. Couple 100 million, I think. Oh, let me look. That week was, yeah, like 112 million. Before they really got liquidity kind of in check, and then it kept running up, right? So yeah, I think that's starting to look pretty good for some covering. I know they have some FTDs coming up too. How far could M run? I have no idea. I could tell you what Gamma Max is. Gamma Max on M is 1656. Silver? Again, still might be better than gold. I have a little bit more silver exposure than I do gold exposure. It could cool off a little bit this week if we don't get a tight, like if we don't get a big increase in yields, right? But the dropping dollar is going to continue to drive interest. And as far as I think BOJ announced that they're going to consider some more yield curve control policy measures. That could definitely spark more silver and gold interest. So right now, I would say technically it looks like it could like consolidate a little bit, but there's definitely some external macro pressure on silver still, and it's it's quite cheap. How low do you see Tesla going long term? um, I don't think like 150 is out of the question by the end of the year. Uh, Especially if the rest of tech earnings start to drag down on QQQ. So if anybody else has really bad earnings, this may keep just driving down. I mean, their earnings were terrible, and forward projections for their earnings are even worse. So T+2 for OPEC starts on Tuesday. I should still buy GME shares for cheap on Monday, aka tomorrow. Maybe. I mean, sometimes we start running earlier in that cycle. Um, Sometimes we start running later in that cycle. It really just depends. Everything I'm hearing is telling me I won't be able to successfully trade in this environment. The beatings my port have been getting are getting worse and worse. Well, it sounds like you just did good on Airbnb. I mean, maybe try to target things that are a little lower risk and don't try to trade the intraday. That was what debit spreads, right? So it's kind of got your hedging built into it, right? It makes it a lot easier to hang on. But you could trade the swings. I mean, moves are more reliable the more time you have, right? Maybe that's where you'll find success. Mix your strategy up. If something's not working, stop doing it, first of all, and start testing something else. Don't keep plowing money into a failing strategy, though. Looks like I don't remember your range. What was the range on it? I remember talking about it, but I don't remember your range. Are you just asking me why BTU is not falling below 25? We're moving into winter and coal demand's picking up and people are uncertain about China. I was hoping to see closer to 27 by this week. I mean, this is almost all political at this point, right? So any increases in the price of coal are going to be because India or China stimulates their economy and generates more demand. So we've got a little bit of risk premium priced into coal because they could do that at any time, right? And that's what's helped drive coal prices, or well, help drive BTU, let's say, from 20 to like 25. But now there's no one's really sure. So you have buyers and you have sellers, but they're kind of in an equilibrium until something breaks. You're also going to have, as markets fall, like these stocks have negative beta generally. It's not huge. It's not like 2.0, but it's like 1.3, right? So they're fairly resistant to a falling market. They're just not completely resistant to a falling market, and they're definitely not resistant to like a crash, right? Because a crash is a huge liquidity dump where everything's just flowing out, right? And no matter how insensitive the underlying stock might be to index moves, it'll still be pressured by something of that magnitude. I do like the idea of SQQQ shares long term, but what's a good option for an IRA that can only hold shares during a downtrend? Just go money market till we bottom? I mean, I think some SQQQ share exposure is probably okay. Um, Especially if you like hit flat trends or bounces and you can sell covered calls against it. I don't shit. I don't hate having some exposure there. It's just kind of a shitty asset, right? So unless you're very confident in the continuation of the downside in the market. Also, watch out for reverse splits. SQQQ is pretty cheap right now, right? Airbnb just saved me from more losses. I did it a directional play because I don't have margin. Oh, okay. Can you get margin? I mean, trading that kind of stuff tends to be better with margin than without. Otherwise, I mean, you need to work on your stops and risk management if you're gonna intraday trade. If you shouldn't be losing money hand over fist trading intraday, right? Most of the positions you enter should just be getting stopped out right away, and then your winners should be getting stopped out slightly positive. But that's like that would be, if I saw someone's time and sales over a period of time, and I saw that they were getting stopped out of probably about five out of every 10 entries, that would be more appropriate for an intraday trader. So think about your risk. Think about why you're able to sustain such large drawdowns and try to fix that. What low risk strategies are you using to get 2 to 6% a month? CCs. I have CCs. I have dividends. I have like longer dated condors that I sell and rotate. I have accounts where I sell like medium term credit spreads, like 7, 14, yeah, 7 or 14 DTE. So yeah, all of those. I have CSPs. I sell shitloads of CSPs. That I've been toning down because the current environment is quite bearish. But if generally in a declining volatility market, I'm aggressively selling CSPs or bull put spreads, whichever one you have the capital for, or naked puts. um, what might lead to the end of this short put regime? It's already dying. I think it's nearly dead, or it will be very soon. The demand for long vol kills it, right? Like we've talked about this for 6 months, and now we finally have it. But yeah, it's the demand for long volatility that pressures them out. They can't compete against that, right? Because they're creating so much risk on the back end to maximize leverage on the front end that their positioning is really unstable. And so if any demand comes in for the downside, they get blown up. And then as volatility increases, right, those intraday, those zero DTE calls, they become way too expensive. And the risk there is like the magnitude of the risk there just rockets. If you're buying zero DTE calls at $2 and you're $5 out of the money, that's amazing, right? But if you're buying them at fucking $12, that's a lot harder to get any kind of meaningful leverage. And that's one of the reasons we didn't really see the zero DTEs become, despite their existence from April of last year, we didn't really see them become prominent until the volatility regime lowered, right? And those zero DTA intraday calls became extremely underpriced. So once vol got back down under 20, which was partially what happened after March, is that volatility drove down really hard. Um, then those became more and more incentivized as the market turned around. And you'll notice that our periods of lowest volatility, they had the greatest impact on market price. I feel like things haven't been so favorable for bears in quite a few years. It's getting me excited, and all this time building up positions at the highs. Nice. Yeah, I'm pretty leveraged to the downside myself. All right. What's up, guys?
What's going on?
How you doing?
Doing all right, man.
How's chat doing? Are they all riled up for some reason?
You know,
like they're all ready for a crash.
It seems like half of them are afraid we're gonna bounce, and then the other half are also afraid we're gonna bounce.
It looks like we're gonna go down, but it seems too obvious, so we're gonna go up. But
yeah, they're doing that. They're doing that. It's so bearish. I need to be a bull thing.
But everybody thinks it's gonna bounce because they're afraid it's too obvious to go down. So now everybody's gonna position for a bounce. Therefore, it must go down. However, you see the problem here with this inversing the inverse of the inverse.
Trying to find composite man neutral is extremely difficult.
It's a recursive function with no terminating condition.
Yeah, everybody before futures open, go watch that scene from The Princess Bride where they're like trying to figure out which glass the poison's in.
My favorite thing during the COVID crash was like we would go down 300 BPS overnight, and then market would open and we'd go up 400.
Jesus, I'm not ready for that.
Nope. I don't think anyone in here is.
Nope. There's no way I'd be able to emotionally handle that. I don't know. I watched the JPOW plus or minus 1% like 3 times, and it's just like, all right, this is stupid. So maybe I'm sort of ready, but I don't know if I could do that.
I mean, all I'm gonna do is day trade 2-year treasuries.
Well, think about it. Think about it this way. Think about the market maker just getting super fucking blown out to the downside overnight, right? And then having to hedge back all their risk during the intraday. that's kind of what happens. I mean, there were days during the COVID crash where we had like multiple 700 BPS moves within like a 3-day period in both directions.
Yeah. I mean,
so it kind of just sounds like if volatility is that massive, you just keep waiting until volatility starts to settle.
I mean, I don't know. I just scalped the shit out of everything, but
yeah, I guess you could.
Yeah, I was just buying like $50 calls and puts away from spot and just seeing whatever hit, you made a fortune, right? You buy like 10 calls.
That's my jam right there.
Yeah.
Just get like $50 out of the money for $100, and if you win, you hit like 50x.
Yeah, vol's still way too low for that shit though. That's like VIX at 35, 45.
I mean, during a market crash, like it pretty much, and the reason why it gaps down overnight and then moves up intraday is because price becomes pretty much directly proportional with liquidity.
Yeah.
And so that's why also when you see like a solution show up, like, you know, whether it's ZERP or whatever, the market just instantly bounces and just goes straight up.
Yep.
Good stuff.
We have a lot to talk about today.
We do. Should we start by talking about my trophy?
Yeah, you pretty much nailed it.
JFresh, did you get AI to draw a dick trophy for Gherkin?
I have 5 more hours left until my ban is lifted.
This is the healthiest thing that's ever happened to you. I'm glad Bill Gates stepped in.
I will say though, Dork and I came up with a really fun thing to try to bypass the the ever the ever growing sophisticated not a hot dog software that Bing is that Bing is creating. I think we have a new way to break not a hot dog. So we're gonna
Okay,
try that. We're gonna try that in 5 hours.
I like it. Have you tried other languages?
Not yet, but you're on the right track there.
Okay.
I figured they're gonna take words and then just filter it through, like, because they own Babbel or something.
I don't
It's
know.
If
Probably.
they don't, it's so well integrated into Google that I would assume that they would whatever no words is automatically done in every language.
Yeah, there's a tricky way to do it. I'm sure we could figure it out. I mean, this is like the most important quant work we could be doing right now. We're building the short thesis against AI.
Yeah,
I
I
mean,
agree.
but this is something that Dork and I were talking about before you got on here. You know, looking at OpenAI trying to get a $90 billion valuation so that they can sell personal shares because they're not creating any new shares, they're just basically cashing out. When OpenAI, when that bubble starts to collapse and the compute for AI generative, processes collapses, we're going to look back on this time and realize that we lived in one of the most just one of the golden age of making penises.
Having
Like, you think
AI
about,
draw penises for you.
we have literally pumped tens of billions, if not close to hundreds of billions of dollars into humanity's most sophisticated random penis generator, and I don't know how much longer we're going to have it.
You're
Yes,
right.
embrace the good times while they're still around. That's for sure.
I mean, I have never had more engagement on your server than when I started posting ridiculously grotesque and
It's the peak of your
crazy.
popularity.
I literally have people DMing me, and nobody ever, like, very few people DM me on the server, but people that never DM'd me before DMing me, begging me to save all of the peeners before they get wiped on the server, and that they want to see them all.
Well, I haven't wiped them,
I know they're there.
but
They're hiding.
they're hiding. They're in
Yeah.
secret places, like my calves. And
Anyway.
I think it's probably just best if our forward facing Discord, like our public facing Discord channels, aren't full of cats embracing various colored dicks. I know it sounds crazy, but maybe some people might find that difficult to open around family members or share with other people.
Yeah, people were definitely getting mad at me when they were opening them in work meetings and stuff. We should probably.
What are they doing on Discord and meetings? Come on, guys. Put your shit together. You deserve to have them see the dicks.
There's a lot of
Anyway,
secret
uh,
corners in the Discord though, and dark
we're
things happen there.
we're gonna have to switch. I mean, the rate at which we're getting new people watching the stream is unsustainable. We're getting too many people, so we need to switch topics, I think.
Oh,
Oh, guys,
okay.
let me get breakfast in.
I didn't realize talking about randomly generated penises wasn't a fuck. That's going to be a big driver of growth, huh?
Yeah, wait until we start adding that to the Twitter presence.
Oh, nice. Yeah, Twitter will pretty much apparently allow you to post anything.
Yeah. Whoever in the Discord pretended to be a Twitter account that represents that speaks for transvestite rights on Twitter, and then just full bore blasted Girk unwittingly with a full frontal nudity of a man, or he, she, it, they, them.
Them.
Great work.
Of them. Yeah. Yep,
Great work.
that one caught me off guard. I didn't know Twitter had nudity on it, and that was shocking.
I've yet to experience that side of Twitter, and I'm okay with that. I can't imagine there's any.
I mean, if
on Twitter
Elon's
that's
gonna
worse
push the porn side, they're gonna become profitable. Because it'll be like
true.
Tumblr back in the day,
Oh,
before
God.
they found God.
We've picked up 3 more viewers.
God damn it! Fuck.
It's the algorithms. It's because we're saying the word porn.
Oh God, where's the bots? Get the bots in here. Hot, sexy boys and girls.
Yeah, hot girls, XYZ 123 chat now. Love those guys.
Oh God.
Yeah.
All right.
Yeah.
So let's talk about how you're going to prepare your pool for winterization. Do you have to in Texas?
Ooh, yeah, we got to get. Ooh, we lost 3 already. Ooh, we
Nope.
lost 4.
Nice. See? I know what I'm doing.
Yeah, winterization in Texas isn't super bad.
Okay.
Because it very rarely drops below freezing. That's the biggest issue is freezing, right?
Yeah.
You just have to make sure that your lines aren't pressurized for your
Can you
pump,
just
especially
dump
your
some
heater.
antifreeze in your pool?
No.
Oh.
You don't, that stuff's not good for your skin. That's like really, it's a big irritant. Ethylene glycol is not.
What about just salt?
I have a salt pool,
Then
but that only depresses the temperature so much. You also have to deal with the fact that at night, so if anybody's in a climate where you're like right above or right around freezing, you can try this little trick if you show your kids, or do it for yourself because it's neat. You can get a thin dish of water to freeze on a clear night, even if it's above freezing. The reason for that is because the water is radiating out to minus 273 degrees of space, and so that can actually drop the temperature enough to get it to freeze. So anyway, you get limiting returns on salt and things like that because at night you're radiating to minus 273.
So you're creating like isn't that kind of how like an H, like those like split units work?
There's a lot of it's actually a growing area of not only research but also development of just trying to radiate all our fucking heat that we make out to space because there's nowhere else to put it.
Interesting.
It's small, and it's hard. We're talking about like a few percentage points shaving off here or there, but we make so much heat that we'll take whatever we can get at this point.
I propose we take all the heat, put it on a rocket, and shoot it at the sun.
Yeah, but the rocket's going to generate a bunch of heat, so what we really need to do, I mean, the easiest solution is just to start using Freon again and everything. Just blow a hole back out in the ozone layer and let all the heat escape.
Ooh. Was that what saved us through the 90s?
Yeah. Also,
I'll just go over to like my local landfill and start hacking holes in old car air conditioning systems and stuff. Do my part.
Yeah. Also, like apparently some of the additives in fuel that were not eco-friendly and were removed were actually increasing the capacity of the ocean to hold CO2. So now the ocean is like belching out extra CO2 because we are not polluting it. Ironically, there's all sorts of. It's a very complicated system, and it's just like the financial markets. You see this segue here, just like the financial markets.
Ooh.
It's hard to predict how one thing is going to affect all of the other things in the system. So
Would
you
you
might
describe that
expect,
system as chaotic?
yes,
Oh shit.
yeah, or at least functionally chaotic. Chaos is, well, I don't want to say that because a double pendulum is actually chaotic. I still haven't quite wrapped my head around that philosophically. Like, how the fuck is something as simple as a double pendulum chaotic?
You know, it's a lot of fun because it really kind of puts into perspective this whole argument of determinism.
Yeah, maybe Nvidia is worth $500.
No.
Okay. Let's calm down.
You've gone
All right,
too far.
let's chill out. All right.
Oh god. Yaga, I'd have to double check that. Can you like find a decent source on that?
I'm pretty sure Yaga's right that the ozone holes on the Antarctic.
All right, I'm gonna start with
No,
Dork's
no, no. But
charts.
he's saying it's large. Is it large? I thought it was. I thought it healed substantially since we blocked usage of volatile organic
It's not as big
compounds.
as it was since we've cut out the chlorofluorocarbon whatever fuck things, but it's still pretty big. It's just it's like I think it's like one of those like logarithmic tail things.
Mm. Another great segue back into the markets.
Yeah, so
Tails.
Gork, you want to start with my charts?
Yeah, I'll start with yours.
Why don't you start with the first one I posted?
Hold on. I'm just opening them. Oh, son of a bitch.
While you're opening them, I would just like to point out that there are 5 people in your Discord that are paying $25 a month for this stream. Oh, now 6 that only care about peener conversations.
That's, actually about the ratio that I would expect.
Yeah, 7 if you count me.
Oh
God damn it.
All right. So that first chart I put, I mean, you could just pop it open on your charts. You already have it open.
Yeah.
That's the daily candles for the SPX, right?
Yep.
I mean, I'm not a big TA guy. Like, I don't know a lot about TA. I mean, I understand the premise of it, right? You draw lines and then things happen around the lines, and it all has to do with like mean reversion, positioning and compositions of men. But just look at those last 3 candles there. Huh? How about that?
Yeah. Have you looked at the monthly? I was showing everybody earlier the monthly one. Look at this shit.
The monthly's shaping out to be pretty ugly. Like that the most recent candle, unless it gets back under control, like, yeah, that's gnarly. So, yeah, I mean,
Also, here's one you'll like. On the weekly, the spread between the 50 and 200 simple moving average dropped by 0.11 this last week.
ew, yeah.
Which, if
So
I zoom in on it a bunch, looks like
I'm sure you'll,
really
yeah,
big. Yeah.
yeah, there it is. Yep. Yeah. So I ain't one to, purport myself to be the chart master here, but I just wanted to look at these candles. I just wanted everybody to remember that everybody who has equities right now is looking at this pretty much this exact chart right
Yeah.
here.
Yeah.
And
I was actually shocked at. I mean, I guess I shouldn't have been because everybody who trades, like 90% of the people who trade on the market, are superstitious as fuck. But everybody's pointing out that we dropped below the 200 moving average, 200-day moving average.
Well, they're all
that's
very
honestly a
concerned,
deal.
right? Because they went long here. And we're now at that price again.
Yeah.
And that's pretty frightening, if 90% of your assets are now about to go underwater. It might make you run for the door.
I mean,
90% of my assets are in short duration, so I'm down like 2% this year.
I must
Pretty
say, I want to congratulate all of the people who went out on the news and said immaculate disinflation and recovery, because they managed to get a lot of asset managers to average up.
Yep.
And well done, you guys. You did such an amazing job. Really did a good job on that, and I can't believe
I
you managed
mean,
to find buyers
and,
like
and calling, I mean, language is a huge tell in the media, and then in just people who discuss finances. And I mean, we all should have called. I mean, once everybody started calling those 7 stocks the Magnificent Seven, I mean, the writing was just on the wall at that point, right? But
that.
anyway.
Totally isn't hubris or elation.
Yeah, I will point out, Dork, that on your chart, this is actually a textbook vulva formation that I've pointed out many times, usually on the 1 minute or the 5 minute. But actually, a completion of this formation would be an exponential return to 4,400.
Mm.
Actually, it would be up to 45.50, wouldn't it, to complete the vulva formation?
I can't see your chart because I'm losing my
The
vision here.
The problem
It's your chart is in like, I don't know. I'm on. Hold on. Let me upgrade my. I'm on 480p. Gross. Here we go.
So the issue is,
Yeah, 4,500 would complete the formation.
the thing is though, is that the depth of the crease and the width, right? They reduce the confidence in the vulva formation.
Oh god damn it! Now we're back up to 226 watching. We said the word vulva one time and everybody popped back in.
Yeah, well, so the DMA thing, I mean, everyone's superstitious or whatever, blah blah blah, but fucking crossing over the 200 DMA is actually a big deal. It's like there's a lot of what are they
Systematic
called?
funds.
Exactly, yeah, systematic funds and prospectuses that talk about,
And long
certain,
short funds.
yeah, they all talk about certain price points, moving averages, things like that. And the 200 DMA is a huge deal, like, because it's, it should never really be crossed to the downside. So when it is, you get a lot of things happening in terms of, yeah, CTAs, yeah, all those guys.
Why 200 and not like 365? Or is it trading days?
It's trading days, right? 200 DMA would be trading days. So technically
So
they
why
should be,
not 252?
yeah, but 200 is an easier number, and everyone in the market is a
Yeah,
bonus.
people in their round numbers. What the hell?
It's pretty rare that the market falls below the 200 DMA without a continuation.
Wiggly, my pool only goes to 5 feet. I have kids and I'm not trying to dive. I have pressure issues in my ears. There's no reason to go deeper. It was a lot more expensive.
That's
All
what she
right,
said.
so superstitions aside, and the fact that we just looked at the daily candles on SPX and talked about it for 7 minutes.
Yep.
The next chart I think is a little more interesting.
Yes, it
I
is.
told you guys to be watching it, and I have been watching it, so I figured to talk about it. So this is the, so red is the high yield AAA spread, and then green is the triple B AAA spread. So we saw both of them move up over the last week. I don't think we've gotten Friday's print yet. I don't think that includes Friday's print. No, it does not.
Okay.
But after Friday, where we saw yields drop a bunch, we could see the spread continue to widen, although it would be to the downside on the yield. But the spreads themselves widening would show increased pessimism in the bond market. One thing I wanted to note about this, though, Jay Fresh and I were kind of mentioning a little bit, like the triple B AAA spread right now is at 108 basis points, which is practically nothing, and pretty much prices the upper echelons of corporate bonds like for an immaculate recovery. Like,
Yeah.
it's so optimistic. Like the high yield AAA is somewhat reasonable at 930 basis points, but high yield is like, you're you're talking like a bond that is comprised of like, Joe Schmo's, non-franchised gas station getting $100,000 loan for a new meth lab. It's some shitty stuff, but so that spread makes sense. Even so, it's a little optimistic, but the AAA triple B is just wildly optimistic, and I fully expect these spreads to widen heading into the new year. So I'm still keeping an eye on it, but the fact that they didn't return back to even more ridiculous levels throughout the week before like the big drops just shows that there's a lot of hesitancy in the bond market. People are moving into treasuries, it seems, so that's that. But counterparty risk in the corporate bond market, I think, is about to start rearing its ugly head, and we might start seeing a bottom up.
Well, we're not. We're probably here's the only thing about that is we're probably not going to see a lot of interest in that until we start to see some refinancing in quarter 4 and quarter 1, right? Quarter 4 and then first half 2024, but then it's going to get really spicy. Actually, going short like HYG might not be that might like continuing to stay short HYG might not be that bad of an idea right now. Or what the fuck is the corporate bond ETF?
Well, there's like LQD.
Yeah.
I think that one's like AAA.
Yeah, short those might be worthwhile over the next like 3 to 6 months. They tend to lag treasuries anyway a bit.
Dude, LQD is $98. That's crazy. The bond market has just been completely and utterly wrecked.
Yeah.
Jeez, and it's
so
only
far.
Corporations,
Yeah,
well, don't forget all those corporations have a better balance sheet than the US government.
Yeah, that's true. Oh my god, which reminds me, I haven't even looked at it yet. There's so much coming up this week is going to be potentially one of the craziest fucking trading weeks of the year.
Oh yeah. Yeah.
Like just absolutely insane. We have because I didn't even consider this. We have 75 billion, 68 billion. We have like $250 billion in bonds being sold this week, and over 100 billion of it is 2-year 5. Oh wait, it's even more. It's like almost $300 billion, and we've got 51 billion on the 2-year, 52 billion on the 5-year, 38 billion on the 7-year, and then I don't know what an FRN is, but there's another 26 billion on that. All coming up this week. And then we have short duration too. We have like 13-week and 26-week at like $150 billion. So Janet Yellen is going to absolutely make it rain this week.
But do we have any tips auctions?
No.
No.
dude,
When's
on our
the
RP,
10-year
been getting
tips?
hammered.
FRNs are floating rate notes, by the way.
I don't know, because Janet Yellen's going to post the next like quarter of like sales on I think October 30th.
Okay.
So that's when we should know more about like the long-term sales. But I mean, nothing's looking good between now and then. We're basically sitting on a continuing resolution that expires in what, 20 days now. And the House still doesn't have a speaker. There's no budget. It's going to be a nightmare of selling bonds for the foreseeable future. And we've got 2 wars we have to fund now.
I want to get some floating rate notes. Those pay quarterly. We have quarterly coupons.
Yeah.
So it sounds to me like overnight RRP is about to drop another 250 billion.
Probably, yeah.
We'll be
We'll
under
see.
$1 trillion RRP at that point.
Well, so it depends on how much RRP is going to go to duration, right? Because
Well, no, they have no choice but to push it into duration. Otherwise, yields are
and
gonna.
well, and also, I mean, a lot of those sale, like 150 billion of pretty much half of what's being sold next week is 13-week and 26-week, and I'm sure some of those are going to be just replacing some that are falling off, right? So I don't know how much of that. I haven't done any of the numbers. I don't know what the net rollover is going to be this week, because you have to factor that in too for RRP. But I did see an interesting theory that RRP might be dropping as banks are selling their duration at a loss and need to maintain their capital requirements,
Yep.
which, if true, is very scary if it's not simply just
Nope.
money
They're
markets.
marking to market shit.
That is, we should be terrified of that progressing further.
Well, if that happens, then
Um,
their earnings are going to be dog shit because then they're going to actually have to, those become not just
I
paper law,
mean, have you
realize.
seen Cree lately?
I mean, I don't know.
But yeah, I mean, there's some folks that say that RRP won't be fully drained until at least the end of 2024, which at that point, so much is going to happen. Who knows? And there's other people that are saying doom and gloom is upon us, and RRP will be drained imminently. The answer is probably somewhere in between. I don't think we run the risk of it going to zero until sometime next year.
I mean, yeah, if you like forward extrapolate the current RRP trend, I mean, it doesn't look like we go to zero until February 2024.
Even then, money will pull back into RRP if rates fall, right?
Yeah, for sure.
So
Yeah, that's the thing.
if we get
You
some
don't
kind of
know, like,
event that causes rates to decline dramatically, then money will flow back into RRP really fast.
Yeah, but then that means that we're squeezing out bond shorts.
Yeah, I know. That's awesome.
yeah, that's also dangerous.
Yeah. Either way, there's not really a great outcome here on the current path, right? I don't see. So here's my question then. Just looking at the bond market, where's the soft landing there?
There
What
isn't
soft
one.
landing?
What's off? Yeah.
There's no soft landing in the
Like,
bond market.
I
There's
mean,
none.
basically at this point, to get a soft landing, we have to stay right here for a while
I
and then
mean,
slowly
there's a pretty good argument
reduce
that the bond
to,
market's already crashed. Like,
or
um,
is in the process
yeah.
of crashing. Yeah.
So I think the soft landing narrative, at least in regards to the bond market, is already proven false.
LQD is the lowest it's been since Jan 2019. Like, I mean, come on. The bond market has crashed. It really has. It's been one of the worst crashes I think I've ever seen. But it's not done yet. That's the part that's really shitty.
Yep, it can go a lot lower.
Yeah,
Yeah,
I'm
like
still not.
I
I
still think
I
I still think we can see the 20-year at like 6 or 7%. I don't think that's out of the question.
I
I
do
know.
too. I mean, seven. That's quite a tail for me, but six is not super unreasonable.
You know what's gonna be funny as
Um,
shit is if JPOW raises rates this month.
I mean, everybody's already basically telling him he's done. So at this, if it, I'll tell you, my wife tells me all the time that I have ODD, oppositional defiance disorder,
Yeah, you do.
which I probably do, and I definitely see it in my kids. So I've passed that shitty trait on to a future generation.
It's good. They'll
If
be
I
good
was
critical thinkers.
if I was JPOW and everybody in the world was telling me that I was done, that's all I would need to raise it again.
Yeah. That's kind of
I'd be
what he's
like,
done this whole time, right?
you fucking fucks, how dare you?
Since March, every rate increase that he's done has been in just direct defiance of the banks. And like, imagine sending JPOW a fucking letter to tell him to stop raising rates. I would
Yeah,
raise rates the day I received it
I'd
if
be
I was
like,
the chairman of the Fed.
all right, I'm gonna double it now.
Yeah.
Like, how
I'd be like
dare
point
you?
0.5. There, deal with that. Fuck your
Like,
industry.
how dare you fight the Fed? which, by the way, I've been thinking a lot about. If I mean, there's already how many realtors are essentially fucked at this point?
All of them?
How is unemployment still at like sub 4?
Well, they get paid a draw, right? So they can draw against their. I don't know. I don't know how all real estate offices work, but I know brokers get paid a draw. I don't know about agents.
There's like 3 to 5 agents per house being sold right now.
Yeah.
You know
To
what?
me, it seems like where's
Well, hopefully, they saved up a bunch of money and went long Nvidia.
I mean, they didn't.
I know.
They're probably all like sitting in a massive house that they got at low rates because they all knew that was a killer deal. And now, like with tax bumps and insurance rate bumps and their lack of income, like they're all gonna just they're under. I mean, realtors have to be suffering pretty hard right now.
They're all like the families from Arrested Development.
That's just the average American family. That's Modern
That's
Family.
the average real estate broker situation right now is Arrested Development.
That's the true Modern Family.
Yeah, living on like a barren plot with like one house on it, and that's the house they live in, and
Avoiding
it's full of big
treason
fruit.
charges.
Yeah.
Jesus.
I forgot about the
I mean, that it's kind of, I don't know. I try to have sympathy for people like that, but then I know that a year ago they were all saying, "Marry the home, date the mortgage," and you kind of have
They're all
to.
still saying that.
Oh my god! Then maybe I shouldn't try to have sympathy for them.
Yeah, real estate agents will say that the house they're selling is a great deal until it's gone, right?
Then they deserve it. I mean, they're just the shit they're saddling on people just to try to survive is disgusting.
I
Capitalism at
just
its finest.
it's okay to have sympathy for the person, but not for the occupation.
Sure, I'll do that. I'll try to
There you go.
separate them.
I know some people who do real estate and like they're really nice people and they don't deserve to lose everything, but the society they have put themselves in basically forces them to be pieces of shit.
Hey, I'm a realtor in Southwest Florida. Well, we like you, G Square.
Yeah, you're one of the good ones.
You're one of the good ones.
You're one of the good guys.
How many times this year have you said, "Marry the house, date the mortgage"?
Also, how many retirees did you just lock into paying 70% of their fixed income into their mortgage?
Come
Those are good
on, give
questions
us
to know.
this is.
Give
Come
us the
on,
juice.
give us the goods here.
This is important market data. We need the insider scoop.
You can just go to a real estate conference. They're usually like $50 to get in.
Not a bad idea.
I feel like they're all just standing around in circles in between each like session. Like at the coffee break, and they're all just standing around in little circles talking to each other, and they're all just repeating, marry the house, date the mortgage, marry the house, date the mortgage.
I feel like they're all gonna meet up around the water cooler and they're like, anybody sell any fucking homes? And they're all like, no.
I've been one of the few ones with morals, telling my clients, wait it out, thanks to you guys. You might
See,
keep.
you are one of the good ones.
This guy knows how to build a sustainable book for life. Those people will come back to you because of that.
Oh yeah, you're playing the long game.
He's also
gonna
gonna lose
come
his
back to you
job
for
though,
that.
because he's not gonna be able to
Yeah,
sell.
hopefully.
Yeah, but he'll still have his real estate license.
That's true. I don't know until Moody's downgrades him personally.
Maybe his broker is not a piece of shit. You never know. There's a few good ones out there.
I mean, I loved my last broker, and I will absolutely, without shopping, if he's still around, go immediately back to him if I need to move again.
I don't have a real estate broker. You fucking rich motherfucker.
The best thing I liked about my broker is that their primary job was ranches for cattle farmers and like horse ranches. That was like their specialty. But they were, you know, personal partners with the owner of the business that did, you know, largely residential. So he was just doing it because he liked us, but it like wasn't his bread and butter. So he had very little like
Can we
he had very little.
elaborate? Can we elaborate on why marry the home, buy the mortgage, or marry the home, date the mortgage uh is bullshit? Yeah, we can, smooth operator.
Oh yeah.
Because the
Did you?
federal funds rate is likely to stay near where it currently is for the foreseeable future.
Yeah, that and if the housing market actually reprices to adjust for these higher rates, you're not going to be able to refi because the
Yeah,
principal's
you'll have to get
gone.
your equity back in line, and you're going to be way the fuck underwater.
Yeah,
So
so
think
there is
about
still.
most markets right now. I think I just read a research report from BOFA, everyone's favorite bank, over the weekend, and the current home prices are still like 175% higher on average across the country than they were 5 years ago.
Yeah,
So think about home prices going back to that 5 year median.
yeah. Think about losing 30% of the value on your house, and that's when rates come down. You're not gonna be able to refi that.
Yeah,
Unless you pay the
Uh,
30% of the equity you lost right there, like on the
yeah.
spot.
Yeah, well, yeah, minus hopefully if you at least put down 20%. I mean, if people are putting down like 3% or 5% or
Dude,
whatever
B
it
of
is
A will
right
give you a
now,
loan
you
for
are.
1%. Zillow will give you a loan 1% down right now.
I mean, I couldn't advise anybody right now to buy anything unless they're ready to plop down cash for the whole thing. And even then, it's like, you
Yeah,
know,
that's still not worth it.
So
Unless you have like
anecdote.
a 10-year stability window, 10 to
So
15-year
anecdote.
stability window.
I got a story of a certain person
I
who
don't know if I'm saying your name wrong, Sasan, but your friend is fucked.
oh yeah.
Jesus
Um
Christ. Fucking 5,300 a month for a condo?
that's garbage.
I have
So,
and I have almost 3,000 square foot house, and I have a an
Humble
additional
brags.
loan, like a home builder, like a home improvement loan at 5%, and all with taxes and interest, and with all of those raises, I'm paying like 3,800 a month. That's
so
crazy.
so here's my personal story on date the mortgage, marry the home. Um so my dad moved us to, you know, kind of where we lived and, you know, where they live now. Back in, it was 2007 was when they closed.
Mm-hmm.
Pretty much almost at the peak of the housing market.
Yeah.
Just the time was right for our family situation. It was one of those things where, like, you know, it just made sense at the time.
Yeah.
The previous neighborhood we were at, as a child, looking back, I realized now what I was watching was the decay of the economy, where like a bunch of really big like families with really low incomes were moving in all around us. You'd see cars parked on the street, and then like by the time we were moving out, you would see all those cars had the 30-day tags on them and everything. But when we moved, right, and I didn't hear the story till later on. Uh, you know, interest rates were still fairly high, and so they like I forget what it was on their mortgage, but then interest rates came down a bunch because the housing market crashed, and so my dad reached out to the bank. I forget who it was. Or I more so I don't want to name names,
Yeah.
but reached out to the bank and said, "Hey, you know, I'd like to get in on this nice low mortgage rate." And you know what they said? Instead of saying to go pound sand, you know what they told him to do?
Mm.
They told him to stop paying his mortgage. And they said, if you don't pay your mortgage for a couple months, we can refi you down to the lower interest rate. And he was like, okay. So, so he went. My dad's a lot smarter than you think. So he stopped paying, right? He on their instruction, and then when he missed one single mortgage payment, a foreclosure notice went up on our house. And so they were going to foreclose the house. And then they came to my dad and said, well, since you didn't pay your mortgage, we're going to foreclose your house unless you can come up with your back pay on your mortgage and all your negative equity. And so he was like, okay. And he back paid the mortgage and paid them their negative equity. And he was like, hey, so I heard that now we get to refinance the house down to a lower interest rate, and managed to do it just like that, and got the interest rate down to, like, I think it was like 2 or 3% or something like that, just some ridiculous number.
Nice.
It's pretty
The
good.
bank was not happy with him for that. They wanted it. They wanted the house.
Yeah.
They were willing to take a house from a family of 4 on 1 month of a missed mortgage payment. So that's just to give you an idea of what it's like to try to date your mortgage during a period of interest rate volatility. Odds are you're going to end up in negative equity, and you're going to be trying to refinance, and you're going to be getting rejected and being told to do shady shit and then have shady shit done on you. And then, so like that's where like being a saver is really advantageous. You know, it's very rare when it really kind of shines, but that's one of those moments where when you're able to sort of balance your books, that's super duper duper powerful, because
I mean,
then
that always sucks, right? I mean, when you're saving, it sucks watching everybody else lever themselves to the tits and live their life of excess. And it's not until they come crashing down that you can just kind of ride it with lower stress. I think for me, I kind of grew up in that environment where I just had a family that had more money than at least our neighbors, but we didn't live. I mean, we lived in much less high quality than even I live now, and we never really stressed about money. And I saw all my other friends in the bad times stressing about money, and so I think that yeah, I mean, it's not glamorous, and you will have to constantly fight the chasing the Joneses mentality, but when shit hits the fan and you're fine, that's when you really appreciate that lifestyle where you live within your means.
Yeah, and that'll be happening more and more frequently as our economy continues on this path.
it could, yeah. We're still kind of in this weird sort of zone where everybody gets to say they're right. It's such a funny spot, isn't it? Like right
Yeah.
now, the inflation ears are right, the deflation ears are right, Tom Lee is right, fucking, what's his face, Peter Schiff is right. Everybody's right now, and it's just super fucking weird.
It won't
Everybody gets
last.
to be right. Inflation bounced a little bit, and
Tom
at the
Lee's
same time,
already Tom
down
Lee's
a
already
bit.
freaking out on Twitter.
Oh, of course he
Yeah,
is, because
I
Calling
wish I wish I
he spent
wasn't
like the
blocked
last
so I
2 weeks
could
calling out like individual comments. I'm just waiting for his peak breakdown. I'm gonna be like, this is why Jamie Dimon fired you, isn't it?
see it.
Oh man.
Anyway, the last thing I'll say on the housing market: if you are in a position where you are over leveraged and everything blows up for you, don't be afraid to just walk away from
Yep.
obligations.
Straight up.
Yep, there's
I
there's a time
know,
to cut those losses and file bankruptcy, and it probably happens far sooner than most people think.
I know people who out of there's this idea that like you should be a person of your word, and when you enter into agreements and contracts, you should do everything you can to fulfill those.
Ew.
That's just going to fuck you over because nobody else is doing that, and even your counterparties aren't doing that, and it's you versus everyone else. Honestly, I mean, that's just how capitalism is.
Well, so
And I know people who stuck it out on their mortgages in after 2008 when they were like super underwater, and they didn't even have any reason really not to go bankrupt, right? I mean, they were just like barely scraping by to try to pay all these fucking bills. and stay afloat. And if they had just gone bankrupt on their shitty house that they wish they still didn't own, they would it wouldn't even be on their record anymore, right? And you just gotta let it go.
I had friends that approached like the financial crisis, kind of like in '08, like kind of well, not really friends, but like family members of friends and stuff. Most of my friends were still too young for property ownership at the time, but like their parents and stuff. And I knew people that just leveraged their credit up to the tits, filed bankruptcy right when it started, and walked away from everything with a big fat pile of cash. And I know people that suffered through it, and the people who leveraged up and filed bankruptcy won every time. They were buying houses again at the fucking bottom of the real estate market, and they started, leveraging up almost immediately right after their bankruptcy. And so yeah, don't be a sucker.
Well,
Yeah.
and a good assessment point too is like if you're negatively amortizing your debt, that is a very clear sign that you should probably file for bankruptcy. Like if your debt is growing faster than you can pay it off, I only see one clear outcome. I'm not giving any financial advice, but if you're stuck in negative amortization, you should really, really seriously consider restructuring your debt.
Yeah, before they change the bankruptcy rules.
Exactly. Yeah, before
Yeah.
student debt allows people to repo your house.
Jesus.
Oh God.
That's
We're
next.
not there yet, but yeah, like
We're
it's
almost there. Trust me, dude. Like student loan, like slabs are like just this massive fucking monster. And like if a majority of Americans with student loan debt just get upset enough at their student loan debt, they could just stop paying it. And that's when they're gonna make it so that banks can just take all your shit.
I mean, they could already hit your paycheck.
That's all they can do. But like I'm just
Yeah.
like they've like if you own a house and you have a bunch of student loan debt that you decide not to pay anymore, like that house will pay off the your student loan debt.
You're gonna see
I mean, isn't most student
universities.
loan debt is government held, isn't it?
Yeah, I
I
guess
think
portions
they're I
of it.
think they're becoming more in line with each other. Like the private debt and government debt are
Yeah.
they're catching up because
If
the
so, that's
tuitions are
not
so
no
high.
bueno. No bueno. Go to a public school. What the fuck?
None of this is bueno.
But there will be a period for those of you that haven't gone out and bought a home. There will be a period sometime in the future where rates are low and home prices are low. And if the government moves, if we maintain a Democratic executive office and Democratic House, there's a pretty good chance that we'll see subsidization of home building and housing prices will plummet if the government starts building out or funding the build out of big housing developments across the country. And there'll
You
be
know
an
that the
opportunity in there to buy
Yeah, you
very,
know that the
very cheap
Democrats.
real estate. What?
Here's something I've been thinking about with housing. Oh, were you saying something, Dork?
I was just gonna say that I know that the government, when they subsidize the housing, it's just gonna make a whole bunch of new luxury apartments and not any single family homes.
Well, I mean,
It'll depend
still,
how
but
they
I
do
mean,
it. It's been
True.
a long
but
time since the U.S. government subsidized any significant housing development.
it doesn't really at the end of the day, it doesn't really matter what they build, as long as if you build enough of it, supply will win.
Yeah.
Here's something else. So everybody talks about this housing shortage, but if there was actually a structural significant housing shortage, I mean, wouldn't we have more homeless people? Like, there's a place for everybody.
We do
It
have
it
more homeless people.
Yeah, we do.
No, well, shit, maybe that's the answer. But I mean, meaningful number in meaningful amounts. Like, what percentage of the population is homeless? If it's not more than 5%, then I can't imagine we have like a number of dwellings problem, right? I mean, we have like an allocation problem.
So about 18 per 10,000 people in the U.S. are homeless.
Yeah, I
500,000
mean,
total Americans experiencing homelessness last year.
that's like nothing though. I mean, it sucks for them, right? But from a structural standpoint, there's not a shortage of housing. And I
Well, there's a shortage
wonder,
of
I
rental.
wonder if like if having rental properties became untenable for a large portion of those who own rental properties, uh, would there already be more than enough housing?
Well,
Well,
that's
yeah,
kind of
sure. There's
like
a
the idea.
shortage of affordable housing, but that's is that because there's not enough houses or there's too much speculation in the housing market?
So yeah, so this is the problem. This is the problem that kind of occurs, right, with when you have such long periods of low interest rates, right? Is what you do is you're artificially inflating the cap rate on rental properties, and what JPOW has done by raising rates hard and fast like he did was he turned cap rates negative. So if you get a like right now it's a renter's market because if you want to buy a house to rent it out, you have to do it in cash because if you get a mortgage, your interest rate on your mortgage, there's no way you're going to be able to push up your rent to get a positive cap rate, especially one that beats the 10-year. So and that's why you see right now when you look at Zillow and you look at rentals on it, you're seeing prices that are like just ridiculously disproportionately expensive to like the cost of the house. You look at like the pricing history on the house, like a house that was bought for $300,000 being rented out right now for like 3,200 bucks a month. And it's because the cap rate on it is just abysmal. And so they're trying to inflate it. And if they can get a sucker to rent the place, then they win. But
Well,
it is
nobody has a
there's
choice, right? Until you run out of, until you just people simply can't pay it. I mean,
yeah,
we're at record unaffordability for housing across the board.
Yeah, I think
yeah.
better than looking at homelessness is probably like looking at like the number of people living on the fringe of the poverty line, and that's a lot of Americans. That's 41 million Americans that are at risk for losing their homes versus people who've already lost their homes.
Yeah,
Or
but
the
and
homeless
renting as
population is also
well.
notoriously hard to track.
So how
People
about
who
this
are
one,
behind
Jfresh?
on their renting, on their
So
rent.
Jfresh,
Yeah.
uh, 58% of young adults in the US are living with their parents. How about that for a statistic?
I mean, I believe it.
Yeah, they
That's
Yeah,
kind
do.
of
okay.
Kicking your kid out at 18 now, a death sentence.
it is. It's a homelessness sentence, which is basically a death sentence, unless
Yeah,
you've
I
taught
mean,
them how to survive the streets.
I would, I mean, obviously the markets are going to look dramatically different in 8 to 10 years, which is when my kids will start to transition to some form of adulthood. Uh, but yeah, I mean, if we come to an agreement where they are productive and they are launching in every other way, but they're just trying to save money the early part of their life, I would absolutely let them live here and hope that they would very quickly outgrow their comfort and move on. But yeah, I don't know. I mean, if that's what's occurring, fine. But if people are living at their parents' house because they're just failing to launch and have no opportunities to go up in the world, which is probably a large portion of those people, I mean, that's a huge problem.
Yeah.
Well, like yeah, like imagine you're living with your parents and you're saving money, so like that's great. But you're like, I really want to move out, so you go look at rentals. You're like, I make 5,000 bucks a month, let's just say, and oh, looks like to live, somewhat near this level of a standard of living is going to cost me around 2,800 bucks a month. Like it's just I mean, that's around, 55-60% of their fucking income going just straight to rent. And that's just a dismal look out into the future of your financial stability.
This is why so rental markets historically are always priced to the extreme, right? So they are always priced to whatever the market can withstand. And even then you have outliers that are, trying to price the market even higher. And what subsidization does is it creates a cheaper alternative, which drags down the private prices of rentals, right? So if you have like a big block of government subsidized housing, it'll drag down the price of rentals around it, because they will have to compete with the price of the government subsidized housing in order to rent their units or their homes, right?
Yeah, I think maybe in a perfect world, but that tends to cause issues of segregation, and I mean that's kind of like Cabrini Green and other places in Chicago.
Well, New York did it kind of successfully by planting all the subsidized housing right in the middle of all the other housing, right? So you couldn't. I mean, it did create, like, obviously
Yeah,
the people living in that housing were majority of a specific race or races, but it's
that's
still
fine. I
it's
mean,
still.
I
I
think
mean,
as
it
long
worked
as it's
for.
spatially integrated, as long as there's some requirement that it be spatially integrated into, existing desirable areas instead of just creating a slum, right?
Yeah, the
Then
original New York housing projects were built on like the outskirts of the city, and they were built in places like Red Hook in Brooklyn and Harlem, and like way the fuck out in Queens where no one wanted to be, and it created a economic imbalance for minorities specifically that were living in that housing, right? Because they had to travel so much farther for work, and amenities weren't as available in those areas, and yeah, so you created ghettos. But then like the Mitchell Lama program of the 70s just started slapping houses, like, or housing projects right in the middle of Manhattan, and in like places like Williamsburg and Bed-Stuy, and then like with much better access to, healthcare services, education, and so it did get better, and for a long time it stabilized New York rental prices for, all through the 90s. It wasn't really until like the housing crisis that started to break down, and the city you know got rid of a lot of those programs, and that fucked it all up. But it was effective for a while. But
yeah,
I'm speaking more on a broader scale, like the government subsidization of housing through like the late 1940s and 50s, where we saw, the government heavily subsidizing the build out of rural areas. Um, and if we're onshoring manufacturing, that'll be possible again. I mean, it'll depend, right, on who we elect and what their targets are. But if they could do that again, they could bring down housing prices and rental prices significantly for the next 20 to 30 years.
I don't know. I mean, all of this sounds great, but the government's they've gotta make a budget, right?
Yeah.
uh,
True.
I I mean, I would love for that to be integrated into the budget, but something's got to give. I mean, taxes have to go up, or they have to eat away at something else. Military, military. Um,
You
Military.
fucking call. Shut up, Jay
You
Fresh.
fucking communist piece of shit. How dare you suggest that we defund our military?
Holy shit, Jay Fresh.
We're
God
in
damn.
two
I
wars right now.
didn't say defund. I implied a small reduction, or at the very least, only giving the military what they ask for, and
Jay
not
Fresh
just
hates
throwing
America.
even.
Yeah. I don't know why you hate America so much. Why don't you move to fucking Europe?
You're Canada.
I don't know what to say because I actually don't want to live anywhere else but America right now.
Well, then you need to get on board with paying for $1 million ashtrays and fighter jets you can't smoke
You
in.
know what? I'm happy to pay for it. I said the other option was raise taxes. I'm not crying. I vote yes on my local
Yeah, we should
bond
raise
sale
taxes and
every
give the
year.
military more money.
Yeah,
Uh,
that's what we should do.
All right. I mean, any as long as somebody makes a budget and there's an agreement that it's sustainable, I'll play ball.
What if when we audit that budget, they lose all the paperwork? Is that
Then I'm gonna
okay?
start
I
getting.
think I
I'm gonna
think
start
that's
getting.
fine.
Cost of doing business.
Yeah.
You got to make the sausage. Sometimes it doesn't work out exactly the way you plan.
All right, JFresh, you've posted like 9 charts, and we haven't touched on a single one of them.
I know it's been we talked a lot more about housing than I thought. I mean, all the charts are really. There's a couple points I want to make. The first one was there was a request about the SPX VIX correlation. So if you could pull that one up first, even though it's like the 5th one.
All right.
Somebody just wanted me to explain it because it's been a long time and I keep posting it and nobody knows what it means.
That's best. You should just remove the. You should remove the axes as well.
I don't find as much enjoyment if nobody understands it like you guys do.
Oh.
Yet
We
again.
use me and Dork prefer to use observational bias to generate the hype around our charts.
Okay. So the top chart is essentially in blue is the SPX and in orange is the inverted VIX. I've done a couple things to it. One, I have removed the long-term trend. I'm not going to tell you how exactly I did it. There's many ways to try to do it, but essentially I've removed the long-term trend from the SPX so I can try to look at what is the shorter-term volatility component, right? Which would be more in line with movements in the VIX.
Like
So
a
then
30-day window.
Sure.
Okay.
Then the VIX is inverted because as price goes down, VIX tends to go up. And so if you invert them, you would expect them to overlay on each other. If the source of the short-term volatility is due to volatility in the options market, then you would expect these two things to overlap. And I've normalized them between 0 and 1 to try to get a sense of, is how much of the volatility is being driven by the options market essentially, and can we use this to try to get a sense of short versus long, right? Because the VIX is inversely correlated to the SPX when everybody goes long on puts and short on call and short on calls, right? So what we saw in 20, and then the bottom chart is just the essentially just the difference between those two up above, right? So you would, in an ideal world, if everyone was going long on options and all of that long options action was driving the volatility of the SPX, then you would expect reality to sit on that red line at 0. There should be no difference between the two. If long is being if long is being overrepresented, you would expect that line on the bottom, the blue line is the difference, and then green is just smooth. You would expect that line to be positive, which it was in 2022. So in 2022, long options, both puts and calls, were driving a vast majority of the volatility that was occurring in the SPX. Then we get to 2023. And kind of like, remember that sort of December where we had SPX and VIX both going up at the same time? That was like one of the first times that we started seeing short calls being meaningfully squeezed out. And that's like, so that dip in December that then ran up into January, that was short calls getting squeezed out, which was not really occurring in 2022 because everybody was just long everything and just trying to play trends and protect against crashes. It was just kind of a mess. And so you started to see this behavior of short vol coming into play. We couldn't really see, it wasn't really clear that people were shorting puts then. It was a lot of short calls. And that got resolved kind of in the February timeframe. And then we started to, drop down after all that squeeze had ended. We started to reverse. And then the bank crisis happened, where a bunch of banks failed. And that's where, at the time, I sort of expected this small foray into short vol to end, right? As people then went back into long vol to leverage, downside and protect. But what happened was the exact opposite. People went into overdrive on short vol, both on calls and puts. And then that proceeded to then squeeze up, right? The short puts overwhelmed the short calls. And basically from April till July, we essentially just went through a number of different short call squeezes to the upside. And that's what everybody was referring to as the blow off top.
Yeah.
But it just kept going and going and going. And it was just months of this ridiculous blow off top
We
that
actually
never ended.
blew out Gamma Max, well, touched Gamma Max on an index twice during that time
Yeah,
period,
yeah.
which
It was
is
absolutely
like,
insane.
if you understand Gamma Max, that's fucking nuts on an
Yeah,
index.
we were literally blowing out the entire options chain to the upside.
You
Multiple times on the largest options chain in the world. Trillions of dollars. It was absolutely insane. Um, and then we come out, and so you can kind of see actually, like right at the middle of July or kind of the end of July, um, we resolved all of that squeezing, and then we stopped squeezing, right? And once we stopped squeezing to the upside, what happened? We started everybody started selling, right? Because selling has been selling of the underlying has been occurring throughout all of this. I mean, you look at throughout this year, you look at equal weighted SPX, you look at the Russell 2000, you look at banks, you look at XRT, you look at mid caps. I mean, everything has been slaughtered. Most of it is down, if not maybe flat, if they're lucky, right? Um, and so everyone throughout this whole pump, which has basically just been driven by seven stocks, as we all know, and the short squeeze to the upside on sold calls, everything else has been just being sold off. And so once that squeeze ended, obviously we're starting to realize this drop down as we recognize that, oh, it's just seven stocks. But what's interesting is that the selling on the shorts, the put side, hasn't fully resolved yet. And so you kind of look that we've dipped after we resolved it in July, we dipped extremely deeply into this negative regime. Um, Hold on, my 3-year-old's tablet doesn't work. You have to go plug it in. Can you ask Harrison to go plug it in? Okay. Now everybody knows my second son's name. That's great. Um, and so we dip very deeply, which tells us that short puts basically have gone all in on this grind down, and that still has not been resolved. It's starting to be resolved right now, right? So those short puts are starting to get squeezed, which is what's really exciting. Because this can continue for some time. And then that brings me into my other charts, and because this conversation has gone long, I'm going to say just look at the SPXW chart by strike.
Yep.
With the thin purple circle and an arrow to 4200.
Did you just say purple circle?
Oh god, I did. No, not that one, the one right above it.
Oh. Oh. Okay.
I'm not even live on the stream. There we go. Okay. Yeah, so what this shows, this graph is a graph of open interest by strike of the SPXW chain. So that's the weekly chain, which is what's mostly affecting VIX and other things. The story that I'm showing you here is very similar to the one on the SPX. It's just a longer term chain in general. But this is the open interest of put options only. So I recognize that there's blue and orange here. Both of them are puts. They're puts at different snapshots in time. So the blue lines by strike are sort of an average of the put OI on the chain from May to September. Okay. And then the orange is current put OI. And what is really interesting to see is that from about 4,000 or so, maybe 4,100 or so, up to 4,400, the put OI is significantly larger pretty much at every strike. And we believe that this is mostly sold, right? And so the 4400 and the 4300s got destroyed. And now we're sitting at one of the biggest sold strikes right above it, 4200. And we all know that the last time we got this close a few weeks ago, we reversed super hard and went through that ridiculous pumpies time before coming. Now we're collapsing right back down to this point. But this is like a big resistance here. Everybody's kind of talking about that flat period closer to 4100, 4150, because that's where we consolidated for so long earlier in the year. But I think the 4200 is really one of these critical points where if we cross this, and if we cross it decisively early on Monday, that's going to be a wild downside fiasco potentially, right? Because the short vol is going to get squeezed even further. Where do I see short vol squeezing down to? I could see it going under 4100, 4050-ish, I think. Would be pretty realistic. I mean, that's kind of where the underwater shorts kind of just start to level off.
Don't forget the acceleration of the market maker hedge, though. So
yeah, I mean, yeah, that so if we get there with speed, like quickly, then yeah, I could see us dipping below 4,000. If we do that, I mean, all bets are off as to what's going to happen.
oh,
So yeah, I
yeah,
think that in like talking
follow
about
that.
short puts being squeezed
Sorry.
out, like short puts can be squeezed out one of two ways. They could be forced into closing, or it's just that the market maker hedge flips on them and their position no longer serves an advantageous role and is now actively being hedged against as it falls further and further in the money.
Yeah, losses start to compound.
Yeah.
And
So
the market
in line
maker
with
is
this,
driving those losses, right?
so I
Yeah.
wanted to point out one other feature too. If you go to that chart you originally put up, the one that's just below it,
This one?
yeah. So this one's a little harder to kind of see the features, but this is just the put call ratio for the SPXW chain over the last, almost 2 years. You can kind of ignore all the stuff in 2022, right? Because that was a lot of long call stuff and we're in a different regime. But you can sort of see that at the kind of like in the May timeframe, those puts started rapidly increasing as the price was rising, and this was largely associated with an increase in sold puts.
Yep.
And then you kind of see this dramatic drop, which starts occurring pretty much with the initial drop in October. So before we had the ridiculous bounce that we've now just resolved. But what's really interesting is that during that bounce, the put call ratio didn't recover, right? So that the last bounce that we just went through was not driven by sold puts. It was purely driven by speculators looking for a bounce. And I believe there was a lot of questions before Dork and I got on about the odds of a bounce. We just had that bounce. That already happened, right? And so we're coming right back down to the point at which all of the bounce hedgers, pushed, right? Could they push again at this point? Maybe. I mean, certainly they can try again. They're certainly motivated to. Could short vol try to push hard again to prevent going below 4,200 and crushing their 4,200 risk by selling more puts? Sure. But what it looks like is we just had the bounce to protect 4,200. Short vol did not bite on that bounce. So that makes me think that short vol is on the defensive and not the offensive. And so the question is are all of the speculators who were betting on a bounce going to bet on another bounce at the same spot after the 200 DMA has been crossed? I don't know.
So the thing was at the top of the bounce, not even Larry Fink saying we should be 80% invested in equities could get the market to catch a bid.
Yeah, the liquidity is we're a lot of the problem with looking at a lot of this without the macro perspective is that the liquidity environment is dry. It's so dry. It's drier than when JFresh's wife catches him making cat dick pics on Bard AI. It's
She's not a fan. I will say that. I can tell you that she's not a huge fan of it. She has tolerated it. She's glad. She agrees with the Bing banning. She thinks Bing is doing is
helping
looking
you.
out for my best interests. Yeah. But yeah, I agree. I mean, how many people have been watching the 1 minute during the day and been like, "Oh, look, there's a huge gap on the SPX on the 1 minute." I mean, it's gapping around like a shit coin.
Yeah. And
I have
and and
another.
the bond vol situation, which I guess we didn't really get to talk about, so I'll leave that up to me to wrap up the analysis, is that bond volatility is still rocketing. The other day I kind of wrote a Twitter post breaking down how these correlation trades move in and out of the market, and I believe bond vol at the time that I wrote that was at 35% since the September FOMC meeting. It's now at 40. And if you
I have another
consider that to
chart
be
too.
roughly the same as VIX, their bond vol and VIX are becoming more in line with each other. Ooh, there's a chart you should do, JFresh. If you want to
Yeah,
do
What am I
if
doing?
you want
Sorry, I
to
was
do a bunch of
plugging in my.
normalized correlations, move to VIX.
Oh, yeah, I
Yeah,
could. Well, I have to see if my source gives me a move, or I guess I could just download it manually.
but
Hey,
I've
Greg.
done far worse.
correlation is breaking down rapidly. If you look at the longer
Move
run
my
here,
chart. My chart's in the way.
oh god damn it. Yeah. There we go.
And I have
Yeah.
I have a chart that correlates all this together as well. I just
Yeah.
posted it.
Oh, okay. Did you? God damn you with your fucking sparkle dots.
The sparkle
um,
dots are the best part. Okay.
but yeah, so correlation is like 3-month correlation. So the longer term VIX expectation is moving now in line with bond volatility, and it's moving up faster than it's moved up since our big drop off in early September and our big drop off in July into August.
Ooh, that's
Um,
fun.
that's probably not something that's going to slow down or stop because the nature of volatility convexity and the forward yield of VIX to bond portfolios is systematically relevant and mechanically meaningful. So as volatility rises, the desire to purchase bonds increases, and as bonds are purchased, they are hedged with long volatility, and so that reflexive action drives volatility very very fast, very very quickly, or well very high very quickly, and so something to keep an eye on over the coming days as our forward yield of volatility begins to surpass the forward yield of US Treasuries.
Yeah, I posted another chart too, and I mean, you've shared this a few times, but so it's the catch up relish chart.
Oh,
Yeah, you got it up right there. But I have it on the weekly.
oh okay.
So
Yep.
we could look at that one though if you want. So
Yeah,
that one's
I
just
could just do
yeah,
this on the weekly.
yeah. So basically, when catch up gets above relish, right? To put things into terms you guys will understand. Um, when ketchup goes above relish, it makes relish want to go up, right? Ketchup is going to push relish up. Uh, and what's going to happen is that's going to make ketchup want to go up even more, right? And you can see it happened in 2020, it happened in 2008. And what that is exactly what Girk was saying, where people get interested in bonds and want to buy them, right? But then they have to hedge their convexity using VIX, right? It's kind of the whole idea is like, yeah, when you buy bonds, right, you want to hedge volatility in the market. So we're probably going to see relish, push up in response to catch up. But if relish surpasses, or if catch up surpasses relish, what that means is that the forward convexity hedge on relish is long vol, right? And that's why you see that pushback there, right?
Can I just say, Dork, I love how you're referring to these lines as just ketchup and relish, which is meaningless to make it simple. But you just said, what was it? Forward convexity hedge. What
Yeah, there's
condiment?
this
What,
may be the best indicator of a future recession statistically that anybody in academics has ever found. And so forgive him for trying to break down an extremely complex
it's not
topic
that
into
it's not
two
the breaking
condiments.
down. It's not the breaking down of the condiments. It's the still the use of extremely complex language everywhere else.
So okay. So sorry. So just to kind of break down like how it works. Like let's say you buy a bond, right? You're expecting the market to get more volatile, but if that doesn't happen and yields go up, right, you're going to lose on your bond, but vol is going to go down, so you naturally want to short vol, right, as your hedge. However, the problem with this is that you need to make sure that when you roll your short vol, the cost of rolling it doesn't outweigh your yield. So there's this sort of interplay happening. But when VIX starts to enter into backwardation, what happens is you actually get a negative roll yield, which encourages you to go long vol as a hedge to your bond
Because
portfolio.
volatility has a positive forward yield.
Exactly. That's exactly why. And so so as more and more people buy bonds, right, you're expecting to get into those bonds at lower and lower prices. And that means that in order to achieve that same yield you would have gotten by buying those bonds earlier, you hedge your forward convexity with long vol. Because what's happening is volatility is now increasing. And not only that, but you are encouraged by the forward yield of the vol curve to continue to hedge with long vol and to increase your hedge. So and this is sort of kind of like the last hurrah of the yield curve before everything goes to hell in a handbasket and it all starts to normalize out. This is sort of part of that process, and it's like a positive feedback loop, but one that ultimately will it's like the engine spinning super duper fast before everything just falls apart, right? That's kind of what's happening here. It's just gonna, it's like a I don't know if anybody here is into like a gigantic diesel engines, but like when the throttle body gets stuck open and the diesel motor just fucking goes full pin and you can't stop it unless you throw a rag in the air intake. It's basically what's happening.
Somehow
Yeah,
you
the
compared
fast
it to the most. You created an analogy that compares it to like something that maybe 3 people in the world understand. Here,
I
I'll make it simple
apologize.
for people.
Ketchup and
Vol
relish.
up pushes yields up. Yields up pushes equities down, pushes VIX up. And those keep happening one and the other, right? So yields, you have like a trifecta of yields, vol, and equity pricing.
Yep. All
And
right. And I have
as
one more chart.
so vol up, yields up, equities down. There. That's good enough, right?
Pretty much.
There is no mustard.
So I have one more chart.
That yield curve's looking sexy.
You want me to open the other one? Oh, okay. Hold on.
Yeah, this one kind of tells you the liquidity environment in an even broader macro sense, right? And what relevant sort of telling you, right?
You want this one?
Yeah, the yield
bear steepener, JFresh's favorite chart.
The bear steep.
How many bips are we into the steepener now?
I'm gonna kill you. That's how many bips. So So if you look at this guy, right? So you have the light green guy, which was the beginning of August. Then you have the darker olive colored guy, which is the beginning of September. And then you have the red guy, which is the beginning of October. And then you have the blue guy, which is like pretty much where we were at on Friday,
Yeah.
right? So look at those huge jumps in the yield curve between, the beginning of September and now, right? This is where you see liquidity like just disappearing from the market, right?
And
It's
into
it's
duration. So you're talking about liquidity disappearing for 2+ years, 2 to 5+ years, really.
even longer. I mean, well, there's no liquidity in duration, and that's why you see this happening, right? This
Yeah.
is this is this is you're literally watching duration liquidity go away. Like, if people do not want duration right now, and it's very apparent. And if you're a long-term investor, seeing something like this has got to make you it's got to make you think, right? Like what is causing the entire market to price duration up so fucking much? And if you look, right,
Mama
the 20
yelling.
year, yeah, exactly. Well, the 20 year is actually now in the Fed's target range. Like, that's fucking nuts.
Yep.
So like this yield curve is telling us that we're not only going to be higher for longer, we're going to be this high for longer, just about.
I mean, it's also telling us that the demand for greater yields on duration in relation to risk, the demand isn't met yet, right? So yields will continue to need to climb in order to find sufficient liquidity.
Yeah, it's crazy. I mean, this is really, and what we can do now is we can jump back to the sparkle dots, and we'll
Damn,
bring
you
this full
timed
circle
that
now.
guy out mid-speech? Well done.
What
Thanks, man.
happened?
I timed out a guy for bips.
Burtonham said bips, and Dork got him while he was talking.
So go back to sparkle dots now, Girk. This will
Okay.
bring it full circle because sparkle dots kind of tells us this exact thing, but on SPX now.
Yeah.
So we got the liquidity index of SPX, and we can see we had a little bump up there. When was that heading into? Let me see. That bump was heading into September, right?
Mm-hmm.
And that's why you see the yield curve not doing too much. But now heading into October, right, you see the yield curve do this huge jump. And at the same time, the liquidity index for SPX tanked right back to where it went during the August drop,
Yep.
right after the big blow off top. So this sort of like it all paints the same picture that liquidity in the market is absolute shit. It's not like the worst it's ever been, but it's not good. And if you can't find a buyer in this kind of environment, the only options you have are to try to force the market maker to be your buyer, right?
Yeah.
And it's pretty much your only choice, right? Or you are the buyer. And, if you don't want to load up on bags because you think that all your assets are overpriced, the only option left for you is to try to get the market maker to do it. But the challenge there is that in order to do that, you need margin, right? And how do you get margin? You get margin through yield, and right now nobody wants yield, so it's like this sort of it is a positive feedback loop. At some point, it becomes one, and we're like at this point we're just kind of waiting around for that to happen, right?
Let's not forget that as the 10-year goes up, specifically the 10-year, because of hedge funds are going to be large buyers of the 10 and 2. And these are your more active funds in the market, right? And their core positions are, they're going to have equities in their core positions like SPY and QQQ, right? But they're also going to be holding, 10-year treasuries as well. And these are going to be all their same as, cash liquidity in order to meet their margin requirements. But as the yields on the 10 and the 2 rise, the value of these goes down, which means they're able to margin less of these large equity core positions, right? And then their leverage ratio drops.
Yeah, that's the
And
danger.
so, yeah.
And this is the whole liquidity, discussion that we're having has less to do with like it has a lot to do with number go up or down, but it also has to do with like how much can number go up or go down. I mean, like low liquidity in general can sort of mean that price, like we see SPX gapping around, right? That's low liquidity, and you can see these crazy runs and big drops because the bid ask is not as stacked as it would be in a high liquidity environment. So as liquidity goes down throughout the entire financial system, you will see more and more volatility in price discovery. And that's a dangerous place to be because that doesn't happen when we have buyers. I mean, at the very least, one half of the bid ask is nice and stacked up. But right now, we don't have either side. So that's where you get into these situations where you have more you have a higher risk of repricing in your main asset classes such as MBS and in your like SPY and QQQ. Those things are marginable, and you're probably margining them as well. So if those assets drop considerably as well, you do end up with your leverage ratio being at massive risk, and that's a huge problem for the market.
So do we want to do our projections for this week?
I think so. I just mapped mine out. I'm going to try to make a serious one this week.
Oh, shit. All right, hold on. Is that the right? Nope. Where the fuck? There it is. Okay. All right, go.
All right. So I think tonight and into the morning, we're going down. I think we're going to test 40. I think we're going to go down to 41.90.
Okay.
And then we're going through Tuesday, Wednesday. We're going to go back up to 42.50.
Okay.
Then the 26th, so Thursday, we're going to go down to 4,200. And then Friday, 41.50.
Okay, so hold on. 4,200 by end of day Thursday. And then 41.50 by... Okay. All
And
right.
my reasoning is as follows very quickly because it's includes stuff that we didn't really talk about. I think there's just a continuation from last week into Monday, followed by some people trying to bounce it. Tuesday and Wednesday, big earnings, right? Tuesday is Microsoft and Google. I think they're going to be fine. And so that's going to cause some positive pressure. Wednesday is a big bond sell, not a ton of duration, but enough. So I think it's going to put a little bit of downward pressure that's going to be kind of offset by good earnings. And then meta earnings are at the end of the day that day, which I think will also be okay, right? They'll get out of it. Then Thursday, we have more bond selling, and I think Amazon's going to be the weak link this week. That's my expectation. I think the earnings per share is way too generous, and I think they're going to shit the bed a little bit, which will push us down, and then into Friday, we'll just keep going down as we lose another Mag 7.
All right.
All right, my turn.
Yep.
All right, gap down to 4,200 at open, and then retest 4,250 by end of day. No, gap down. Start that line at 4,200, my friend.
Okay. Hold on. Gap down 4,200. Then
Yep.
end of day 4,250.
Correct.
Okay.
And then the next day, retest 42.25. Yeah, we'll say 42.25 retest by midday. And then where are we gonna go from there? Shit. Okay. So we test 42.25. We break. Let's just assume we break that. So close the day back at 4,200. End of day Tuesday. Or no. Sorry, we closed the day at 42.25 on Tuesday, and then pretty much right there with JFresh on the way up because of earnings.
Okay.
Yeah, so something like that, and then yeah, just I'd say yeah, up to about 42.50 again, and then yeah, we got Yellen bonds and shit. So I'm gonna be a little more bearish and say retest 4,200 by end of day Thursday, and then I guess it's not that much more bearish. Yeah, we'll put it there. I like that one. That one looks nice. I want to be more
Okay.
bearish than JFresh. But then into Friday, I say we go flat.
Oof. You're
Yeah,
killing me, man.
I think it's going to be an extremely painful week.
I mean, we look pretty close.
Yeah, I just think that the agony of like a week of testing the 200 DMA, everyone's talking about it, so I have a feeling there's just going to be a bunch of resistance because the market's a douchebag.
So everybody's just gonna bleed theta this week.
Pretty much. I mean, I have to believe it's what's going to happen. I mean, the market is merciless. I mean, unless OPEX is interesting, but anyways.
All right,
all right,
so I think tomorrow we continue to fall off to like 50.
Ooh, damn.
Opening under 4,200. I don't know how much below. I'm gonna say 195. 192? Oof. Hold on. There's a... Yeah, I think we can continue down roughly to 4,100.
I can't do this right now. I'm too bearish.
And then oh fuck, I destroyed my line. Hold on. I gotta start it over. What did I say? 195 to 4,100. Then we attempt to recover 150. So I think 150 by end of day Tuesday. Where is that?
You've already you stretched out your first line way too far. It like ends on Thursday.
Oh.
You just move those.
My scale's just all fucked up. Yeah, here. There we go. So 150. It's right there, and then Thursday, I think we continue up. Maybe retest 4,200, and then down to like 4,100 by the end of the week. All right. Oh god damn it.
Cover those bad boys up so we can tell what they are.
Why is it doing that?
It's the pencil one, right?
Oh yeah. And then this one's pink.
Oh,
and JFresh is white.
That's Gork, or that's Dork.
Oh, shit.
Yeah,
I did it backwards.
I'm the one that's flat.
There.
So Dork is the most bullish this week. Didn't you say you wanted to be more bearish than me?
I'm the least bearish, I should say. I was thinking about it. I wanted to be more bearish than you into the middle of the week, but at the same time, like, there's no denying that 4,200 will be fought for tooth and nail. And I think that Girk is definitely, his prediction is banking on a test of the breakdown of the long-term downtrend.
I want to add this to mine that I think that if we break 4,100, this isn't stopping. No breaks.
I would agree with that.
I think we could all agree with that. So
Yeah.
I'm gonna add that to all of our predictions that if we break 4,100, this is gone.
Yep, I'm positioned for it.
So how much upside are you? Why? I mean, you. If anything, you just need theta. You just need a theta hedge if you're short.
I
I
mean,
mean,
yeah,
unless we're all extremely wrong and we just bounce hard, just get a face melter.
that's what I was thinking with my gap down and move up was like that's a 100 basis point recovery. But in reality, if vol gets really high, we've seen this happen multiple times where vol gets super duper high, the market gaps down really hard and then just goes straight up for the rest of the day and then starts an uptrend.
Yeah, because they can sell the short puts in a high vol environment.
Yeah,
But I don't think
gap.
I think if we open under 4,200, they can't sell enough short puts fast enough to offset the hedging the 4,200s that already went underwater.
And recall too, the reason this last pump failed is because the big short ball players did not follow them up.
Yep.
And so it'll be interesting to see if they defend or just get the hell out of the way.
Yeah, we could even see them go long to hedge, right, in the overnight. And like long sorry, they go short as like in the overnight session to hedge the breakdown. If we see that, then yeah, this thing's gonna fucking
Yeah.
tank.
I mean, Yellen's just going to batter this market this week, and so I think really it's going to come down to if Microsoft beats and Google beats and Meta beats, it's going to be just a wild ride. It's going to be all over the place.
I'm so excited, dude. This is a good week. I love
Even
this.
even if they beat, here's my thing, and like I agree, I projected up into the midweek because of it as well. But even if they beat, does it matter? Like how much more can breadth break down?
I don't know. It
That's
seems
the
to keep
key.
Like
going. I
those
mean,
7 stocks aren't capable of holding up the other 70% of the index, right? Like no matter how much, like there's a break point, right? You can only pump
yeah,
so much
I've been
money into
waiting,
them
and
before they stop doing anything.
I've been waiting for that break point, and I've like I
Meta
said last week.
actually. So Wiggly asked, "What about Meta, the stablecoin?" Meta, I don't think Meta will lose value until ETFs start selling the Mag Sevens.
Meta won't lose value until literally the last Meta office closes and they file for super duper bankruptcy.
No, but
uh,
seriously, the reflexive effect of like QQQ tracking ETFs selling Mag 7 will drag the market cap down. But
Oh
that
yeah, like
I don't think anybody's gonna actually sell the underlying until the price starts to drop. Because they are in a financially, like they're in a very stable position, even though they have a kindergartner blowing all of their money on virtual reality worlds that he wants to live in.
dude, the VR world that he built that was valued at $1 trillion has like 50 concurrent users at a time.
It's just
I don't know,
Zuck. It's
Fucking
just
hate
Zuck
that.
and his buddies.
dude.
I
If
fucking
you
hate that
can
guy.
value, if you can value a monstrously expensive uh, uh, penis generator at almost 100 billion, then 50 users in a virtual chat room with realistic avatars is easily $1 trillion.
I also
They're not
wanted
even
to say
realistic. They're
that's
Wii U. They're Wii U people.
J Fresh.
So
last week you came in second place with your prediction of straight down by 180 basis points.
Straight down.
Dork missed by 228 basis points, and I missed by 38 basis points.
Yeah. But my prediction was pretty good. It was just off. It was just early by 2 days.
I'm just saying, use that in the quant hierarchy for the rest of the week and lord it. You know, you slayed.
Okay.
Yeah.
Intra week, though, my prediction was best intra week. That's all I want to say.
Your prediction was best Monday, Tuesday. It was.
It was.
You nailed on. Monday, Tuesday. Yeah.
Even the drop was pretty good. It kept dropping. If it didn't keep dropping, I was gonna fucking win.
I mean, if you move.
All right, no getting salty about it.
If you move my line, 2 days forward, then it would have been perfect. I was just 2 days early.
Your line 2 days forward is where my line is now.
Also, yeah. Also, I just picked the easiest thing I could pick because I was hungry and I wanted to leave.
That's fair. Yeah, I'm also hungry now.
Yeah, me too. So this line is a serious line. So if this gets it's not going to do that. It's either going to go straight up or straight down.
Yeah, I think vol is getting too high for us to keep doing this, but it's still fun.
Yeah. It's starting to get way too unpredictable.
Yeah, I'm already looking at this like, fuck, I need to change this. But I'm gonna keep it where it is.
Yes, we got to stick with our guns now that we've had the lines drawn. This is the dot plot. We got to stick with it.
I mean, the Fed's allowed to be like way the fuck off on theirs, so it seems fair.
All
right. Thank you guys so much for coming on. I appreciate it.
Always fun.
Thanks for having us.
Bye. All right. See you.
All right, guys. If you need me, I'll be around the rest of the day. Thank you so much for tuning in. Hit me up if you need anything. Pickles picks out tonight, probably after midnight. So keep an eye out for that, or keep an eye out for it in the morning when you get up. And I'll see you guys all tomorrow morning. Have a great rest of your weekend, everybody. Later.